Welcome to the European market open. A minute to go until the start of cash equity trading. I'm Tom McKenzie in London with Francine Lacqua in Doha. And here are your top stories as fast as possible. Richmond Fed President Thomas Barkin says rates should be raised rapidly as Jay Powell prepares to testify in the Senate. The overnight stock rally turns red in Asia. Oil follows equities. Crude drops with economic concerns in focus. President Biden gears up for showdown talks with industry executives. And UK inflation hits a new 40-year high of 9.1% as food and energy prices surge. The pound slips against most major currencies. Right, that market rally didn't last long, did it? The futures pointing to downside. If the futures come to pass, then you will see a wipeout of the gains that we've seen across the European equities, about 1.3% Monday and Tuesday. The futures pointing to losses now of 1.4%. Those recession concerns articulated by the likes of Morgan Stanley, Goldman Sachs saying there's potential further downside, particularly for US equities. Of course, we face up to the risks of recession. And the IEA head speaking to the Financial Times saying that Europe must prepare for a potential full cut of Russian gas later this year. The FTSE 100 down by almost 1%. Keep an eye on what's happening in commodities. There is pressure across iron ore, across copper, and of course oil. We'll break that out for you shortly. The commodity space certainly feeling the pain in the session today. The CAC Quarante down 1.4%. The politics still at play there as the parties work on coalition plans. The Spanish IBEX down 85 points. Let's switch it over and see how things are playing out then. Of course, it was a solid day over on Wall Street, but the handoff was dropped in Asia. Concerns there about what's happening with COVID-0, but it's really recession front and center globally that is front of mind for investors. The S&P futures looking at losses of 1.2%. The 10-year that is bid this morning, 3.22 is the yield you're getting in the 10-year. You're looking at moves lower by 5 basis points. The pound, 122. So further pressure on the pound, on sterling, down 0.5% on the back of that CPI print. Came in line with estimates, but 9.1%. Backward looking for the month of May, and the expectations are you're going to see that move possibly to as much as 11% as energy prices, and that cap is moved higher later this year. Brent, 109. Look at that, a drop of almost 5%, 4.7% Brent. That is linked to those recession concerns. Once again, we continue to keep across the oil space. Credit Agricole, this is one of the corporates in focus for us today, down 2.4%. They're outlining their plans up until 2025 and how they expect to increase revenues to about 6 billion for that year. NatWest and the announcement by the UK government, which holds about 48% of this UK lender, gaining 2.3%. They're going to expand the time frame for selling down their shares for about 12 months until August of next year. Hugo Boss, unchanged at this moment, but Fraser has increased their stakes to about 5% in Hugo Boss, German listed, of course, on their views that the management is pretty solid and they're confident in the forward-looking plans for that luxury brand. Right. Francine is on the ground in Doha speaking to policymakers there, as well as a number of executives. What is front and center for you this morning, Francine?
Well, Well, it's definitely recession risks, and when you see recession risks around the world, what it means for this region. Now, we've had plenty of interviews, Tom, from the event so far. Elon Musk, Herbert Diess, Bob Diamond, just to name a few, and there's much more coming up. Today, we'll also speak to the Boeing's chief executive, David Calhoun, Damac Properties founder, Hussein Sajwani, and then a little bit later on, I'll also be hosting a panel with Gianni Infantino, the president of FIFA, as we count down to the Football World Cup here in Qatar. But of course, the underlying concern here in the region is inflation, and because of the proximity also to countries that really depend on the price of wheat, there's a lot of talk about what the GCC countries can do to maybe help some of their neighbors.
Okay, those inflation concerns being outlined then by executives and policymakers on the ground in Doha. We'll have plenty more, of course, from Francine throughout the next few hours. Right, let's get back to the markets then. The overnight stock bounce in the US has rapidly reversed, with equity indexes now deep in the red amid ever louder warnings that Fed tightening may lead to that recession. Here's how guests on Bloomberg TV predict the situation will play out.
A recession is inevitable at some point.
It's almost unavoidable.
I got to think that the odds are that there's going to be a recession.
Seeing a cooling of the economy is something that we believe is appropriate.
As to whether there is a recession in the near term, I think that is more likely than not.
We're going to have kind of a tough period here.
Our economists, as you've noted, this morning have increased their odds of a recession this year, but really more focused into next year.
If we can stabilize the energy market, I believe when the Fed does their job, we'll have inflation under control.
Inflation's not going to cure itself.
There will be, again, more surprises and more shocks coming from central banks.
I think this inflation is quite bad. It's intransigent. It's not transitory, and the consequence will be a recession.
Okay, voices there telling and giving some sense of what the expectations are around a recession. Let's bring in Sharon Bell now for her views, European equity strategist at Goldman Sachs, joining us. Sharon, what is your now base case when it comes to the question of a recession in Europe, and what is the shape, what is the flavour of that recession, if indeed that is your view, as to where we end up towards the second half of this year, looking into 2023?
I think whether it's a recession or not, I mean, whether it's kind of negative, it's still going to be slowing over the next couple of quarters. I mean, you're right, inflation is eating into people's real incomes, interest rates are going up, economies are slowing. We've raised our estimate probability of a recession in the US. I think we now think it's cumulatively about 50% chance, like a flip of a coin over the next couple of years. So I think that all those factors are going to mean a clear downturn in growth.
So, Sharon, and good morning, actually, from Doha here in Qatar. What kind of a recession, and can we really avoid an earnings recession, even if the economy just skims through?
So this is a good question, because earnings forecasts haven't really come down. Earnings forecasts are still pretty high. Analysts, if anything, have been upgrading forecasts. You remember the Q1 earnings season was great, actually. There were a few profit warnings from the retailers in particular. And I guess maybe they're the first ones to feel it. I do think that if you get a recession, even if you get a downturn in growth, you will see earnings come down quite a bit as well. I mean, in Europe, for example, we find that each 1% move in GDP, you get a 10% move in earnings for that. They're super high beta, I guess you could say, to those moves in GDP. So if you've got a 1% contraction in GDP, that would mean a 10% fall in earnings. We're not forecasting that type of contraction, but clearly if you did get that, it would be quite painful for earnings. And then it's going to be probably led a little bit more by the consumer this time, given its inflation. And you've seen that a little bit, as I mentioned, the retail sector is probably the one sector where earnings estimates have been coming down so far this year.
Okay, so that on the question of earnings. Just bringing to your attention, Sharon, and for our viewers as well, a line crossing the terminal right now. The SMI, the Swiss market, falling about 6%. The index is down now 20% from its highs of December, so it is setting itself up for a bear market. Of course, we are already in a bear market when it comes to the S&P 500. Sharon, how do you position then at this point around these risks, and what do you make of the moves that we've seen just in the last few days? Are they kind of the death throes of the end of this, what was previously a bull market, or is it an attempt by investors to get a grip and they're starting to see light at the end of the tunnel?
Yeah, it's everyone wants to know this, don't they? I think, if we're talking about recession hasn't happened yet, and typically bear markets, which you're right, we're in. The S&P is already down 20%. Quite a few of the European indices are down by that much. In dollar terms, they're definitely down by 25, 30%. So a lot of indices already in bear markets. When do bear markets typically trough? They typically reach a low, reach a nadir when you're in the kind of foothills of recession. And we're not quite there yet. We've been talking about the fact that earnings are still being strong, growth has still been good at the moment, but I think it will slow. So it feels to me more like a short-term rally rather than something that's a real sustained turn.
Sharon, what does it take for actually markets to go higher with conviction? I mean, it seems that every day, there's a lot of volatility. What will settle their minds?
I think, in an odd sense, getting that recession might settle the minds. It was interesting listening to your clip of everyone talking about the inevitability of recession or the chances of recession. I think this is increasingly what investors are worried about. So, but I think ultimately, the thing that normally shifts sentiment on markets is policy. We saw that around the time of the pandemic. Markets actually started recovering well before you actually saw a vaccine. It was all to do with the policy response by the central banks. At the moment, policy is actually still in the tightening phase. We're still upping, generally in the last few months, been upping our interest rate forecasts, central banks tightening quite aggressively. And I think really we need to get to a point where people believe all that tightening is in the price and they can start to expect eventually, if you get a downturn in growth, central banks turning a little bit and starting to loosen policy. And again, that feels a little way off at the moment.
Yeah, and the Fed's Thomas Barkin, not a voting member at this point, saying that you need to go as fast as possible on rate hikes without endangering financial stability. Just to underscore that point, Sharon Bell, European equity strategy at Goldman Sachs. We'll get more of Sharon's calls and the view as well on UK assets after the break. Talking of which, coming up, the pound extending its decline as UK inflation reaches a new 40-year high. It was almost inevitable, wasn't it? We look at the CPI data next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back to the Open. We are 12 minutes into the European trading day this Wednesday morning, and the gains of yesterday already in the rear view mirror. You're seeing losses here in Europe of 1.7%, the future stateside pointing to losses. The Nasdaq futures pointing to losses of close to 2%. Treasuries are bid and the commodities complex is getting crushed. Let's get back to what's happening in the UK, though. UK inflation rose to a fresh 4-decade high in May after broad increases in the cost of everything from fuel and electricity to food and beverages. The rate accelerated to 9.1%. That was in line with economists' forecasts. While the jump was smaller than seen in recent months, the figures still underline the scale of the inflation crisis facing the UK. Sharon Bell, European equity strategist at Goldman Sachs, is still with us. Sharon, what is the Goldman Sachs prognosis on the UK at this point?
Yeah, I think the UK is probably the closest to being or getting into a recession. We have the next couple of quarters incredibly low growth in the UK, kind of close to zero. And I think that is driven by the concerns that you've just been highlighting, inflation at a 40-year high at the moment. It will probably go higher. This is not we have not reached the tip of the peak of this inflation cycle. I think that will probably be more likely in October when you see the energy cap rise again. So more inflation for the UK, relatively weak growth for the UK. And that's also, of course, we've had quite a few interest rate hikes that will hit people's mortgages, etc. So quite a lot of different factors impacting the UK as well.
Does this CPI print, do you think, force the hand of the BOE to push through an historic 50 basis point hike at the next meeting, Sharon?
Yeah, I mean, we expect them to do 50 basis point hikes. We expect them to do a 50 in the August meeting that they have. We expect a 50 in the September meeting. And you're right, that's an incredibly sharp pace. They had been quite cautious up to now, doing quarter point hikes. And I think the reason for that is the levels of inflation. Also, globally, central banks raising rates pretty fast. We think they'll then slow down a little bit towards the end of the year because at that point, I think inflation probably will have peaked and start to come down and start to slow.
Okay, so brace yourself for 50 basis points. Whether or not that puts a floor under sterling currently at 121 is another question, of course, the impact there on inflation. Sharon, just briefly, when it comes to the FTSE 100, of course, delinked largely from the fundamentals of the UK economy, but something of a hedge in the environment that we see ourselves in today, just down 3% year to date, of course, compared to, 22% stateside or 17% in European equities. Do you find an opportunity in UK equities? And if you don't, what else is looking attractive? Where are the value at this point?
Well, I do agree that the UK is kind of delinked. UK big cap FTSE 100 stocks are somewhat delinked from the UK economy. About a quarter of FTSE 100 sales goes to the UK. The rest, 3/4, is global, really. But of course, global economies are weakening at the moment too, which is why even the FTSE 100, not very domestic, but exposed to global issues and has come down a little bit this year. But it's nowhere near a bear market. I think the reason for that is it came into this year at a much lower valuation, much less sensitive to higher interest rates and all those sort of sell-off in the higher growth tech companies. I think the UK's FTSE 100's main vulnerability is if you do get a big sell-off in commodity prices. That's not something we forecast, but if you do, that will be where FTSE 100 is most vulnerable.
Okay, the reliance then of UK equities on what happens in commodities and the linkages there. Sharon Bell, European equity strategist at Goldman Sachs. As ever, thank you for this, for your insights this Wednesday morning. Okay, let's get the Bloomberg Business Flash now with Laura Wright. Laura.
Hi, Tom. Shares in Germany's buyer tumbled after the US Supreme Court rejected a multi-billion-dollar appeal from the company that it should be shielded from legal claims that its Roundup weed killer causes cancer. The justices left intact a $25 million award to a Californian man who said decades of exposure to Roundup caused his lymphoma. Richmond Fed President Thomas Barkin says the Fed should raise rates as fast as it can without causing undue harm to markets or the economy. Barkin does not vote on monetary policy this year, but says he supported the central bank's 75 basis point hike earlier this month. He says the US central bank may need to raise rates beyond neutral and into restrictive territory.
We're in a situation where inflation is high, it's broad-based, it's persistent, and rates are still well below normal. And so I think the spirit is you want to get back to where you want to go as fast as you can without breaking anything.
A unit of Glencore has pleaded guilty in a London court after the UK's Serious Fraud Office found the company paid more than $28 million in bribes to 5 African countries. The Swiss commodity giant said last month it expects to pay some $1.5 billion to settle bribery probes in the US, UK and Brazil. The penalty in the UK has yet to be finalised. That's your Bloomberg Business Flash. Tom.
Laura, thank you. Okay, coming up, we will be with Damak Properties founder Hussein Shadwani from the Qatar Economic Forum. We'll get views, of course, on the property sector at a time of, at least globally, stateside and here in the UK, at much higher rates, what that means for that sector. Stay with us. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open. 20 minutes into the European trading day. The gains of yesterday, well, they didn't last long, did they? It is a pronounced risk-off mood today across equities. You're seeing that reflected in the dollar, in bonds, and certainly in commodities. Currently down 1.6% across your benchmark European stock 600. The futures in the US pointing to losses of between 1.8 and 2%. Right, let's turn to the property sector now as we return to the Qatar Economic Forum. Francine standing by with another guest. Francine.
Right, I'm joined by Hussein Shadwani, the founder of Damak, and I could not be more delighted to speak to you, sir. Thank you so much for joining us. When you look at the recession fears, what everything is talking about inflation, what does it mean for the Dubai property market, which is extremely strong at the moment?
Well, Dubai property market is doing amazingly good. The demand is there. And don't forget, we had 4 years of slowdown, so a lot of supply was also been kept away. So now there is a huge demand. Dubai has managed the COVID time very well, and the Expo, and the world leaders, the world businessmen, people from all over the world came to Dubai in Expo and realized it's a hidden jewel from all the angles. from the tax, from the safety, security.
Yeah. And so this is people from the region. How many Russian residents, for example, do you have? Do you have a lot of demands?
There are Russian coming, but not to the extent which people talk about it and is there. So I don't think a big number of Russian, but we have demands from, the biggest demand this time has come from Europe, from Germany, from UK, from Scandinavian country, from Romania. We have customers coming from Eastern Europe.
So talk to me a little bit about your reasoning behind delisting the company. You delisted the company,
yes,
but actually just when the property market was also booming.
No, we planned that in 2019.
Yeah.
And we submitted our application to the government, to ESCA, in February, end of February, beginning of March of 2020. And then our stock prices was 40 fils. But the process took longer. And we bought it at 1.4. So we bought it about, almost 3 times than what it was. But that's fine. We have no regret on that.
No regrets. Do you worry about a recession?
I worry about the recession in Europe. From my readings, that the recession in EU is going to be very mild and going to be very quick. Europe is going to be, could be very hard landing, but it all depends on the war with Ukraine, with Russia, and which direction that war going to go. If a ceasefire happen in the coming few months, and I hope so, then I think they will have a recession, but mild, and will not last very long. If that war goes for longer and gas prices or the supply of gas get interrupted, then they could have a harsh landing.
And what does that mean for property in Dubai?
Fortunate or unfortunate, whatever you call it, property Dubai is benefiting from any crisis around the world. So property prices benefiting Dubai. A lot of people finding Dubai safe haven, coming to invest, coming to live. I know a number of wealthy people from Europe. They're coming, moving their families because they find it tax-wise very attractive and connectivity is there. And believe it or not, Zoom has made a big difference, okay? Or people can communicate over the Zoom so they can do their business over the video.
I mean, what's doing really well at the moment is the, of course, real estate space, but branded with fashion brands. So I think there's something with Cavalli, there are condos that has that luxurious stamp of a well-known fashion brand. How many are you planning to do in terms of these collaborations?
We just launched 7 months ago, our Cavalli Tower, and was amazing response, and was sold out within no time. Yeah. We launched now our product called Safa One, which is by Grozogono, which is a brand we bought, Swiss jewelry brand, and we're planning to expand it. And as a matter of fact, we're looking to partner with jewelry companies in Asia, in USA, and Europe for the Grozogono.
And you'll do more after that?
And we just did Safa 2, which was just last week, and is doing very well. So we see now how things go in October after summer.
Now, your firm also allows actually transactions to be paid in cryptocurrencies.
Yes.
I mean, the volatility in the last couple of weeks must have hurt.
No, when we allow that, people pay in crypto, we sell it immediately, and we don't take the risk of the crypto. We sell it immediately in a matter of 48 hours and take our cash.
So why do you allow crypto?
Because there were a lot of customers who had crypto, remember a few months ago, and they were making a lot of money. And they wanted to cash out. So they want to buy a real estate and, reduce their crypto exposure.
Okay, very interesting. I mean, I don't know whether you'll curtail that in the future, because even in 48 hours, there's so much volatility, it could actually be more painful to sell at the same price.
No, okay, there is a margin of safety, or there is a margin of profit that as a business you calculate that into your pricing. That's normal.
Okay, thanks so much for joining us. Hussein Sajwani there, the Damac founder. Now we'll have plenty more, of course, from Qatar at the Qatar Economic Forum. We talked to Thomas Norokche, the Chief Executive Officer of Joe and the Juice, on his expansion plans. This is Bloomberg.
know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open, 30 minutes into the European trading day, and here are your top stories. As fast as possible, Richmond Fed President Thomas Parkin says rates should be raised rapidly as Jay Powell prepares to testify in the Senate. Stocks tank in the first 30 minutes of European trading. Oil follows equities, crude drops with economic concerns in focus. President Biden gears up for showdown talks with industry executives. And UK inflation hits a new 40-year high of 9.1%. That's as food and energy prices surge. The pound slips against most major currencies. Let's check in then on these markets. It is a significant risk-off move that we've seen. The gains of more than 2% on Wall Street yesterday, and the gains of 1.3% Monday, Tuesday here in Europe being wiped out, at least as things stand. The futures stateside pointing to losses, particularly on the Nasdaq, of close to 2%. It is recession and the concerns about recession. Don't forget, we've had the likes of Goldman Sachs and Morgan Stanley saying they expect further downside for equities in the US. And we've heard from everyone from the doom monger of Rubini, we can put him to one side maybe, but also Elon Musk and others pointing to what they see as a recession this year. The European stocks benchmark down 1.5%. The DAX is being hit hard, 266 points. Just fleetingly looking at that, but that is down almost 2% over in Germany. The FTSE 100, there's the basic resources and the energy complex there as well to focus in on. We had that CPI print, 9.1%. Backward looking for May, you expect that to rise possibly to double digits. That is the forecast from the Bank of England as that energy price cap is raised. And we heard from Goldman Sachs' Sharon Bell earlier saying she does think the BOE goes 50 basis points at the next meeting. In terms of your sectors, the bloodletting really being felt in energy. And you just need to look at Brent and WTI. Oil looking at monthly losses this month. What does that do for inflation going forward? Does it start to ease some of that? We'll look at that as well. But you're also seeing iron ore and you're seeing copper under pressure as well. Basic resources pointing, look, losses of more than 3%. So it's basic resources and energy that are really feeling the squeeze. Let's get back out, though, to Doha and the Qatar Economic Forum, where Francine is standing by with another excellent guest. Francine.
So, Tom, Join the juice bar chain, whose owners include Egypt's richest man and the H&M billionaire family, will expand in the Middle East as part of growth plans to prepare for a possible IPO. Now, it does want to popularize juice globally the way Starbucks spread takeaway coffee culture around the world. Now, the company reckons going public could help achieve the goals. So joining us now is Joe and the Juice Chief Executive Officer is Thomas Norokshi. Thank you so much, Thomas, for joining us. I mean, this is an extremely exciting moment for the company and for yourself personally, because you're expanding, for example, in this region in the Middle East. Do you ever worry about overexpanding, or is this the right time to be aggressive?
We have been looking into the region for probably 10 years been approached by various people. We now believe it is the right time. We are always concerned about also, like Owen expanding, we don't want to be on every street corner. We want to be selectively, and that's also why we go into more countries. Instead of going deep into one country, we go more broadly. And we are currently in 16 countries, so rather big
more.
footprint with 300 units.
So, Josh, talk to me a little bit about how different it is. You know, I live in a part of London where there's a lot of your Joe and the Juices bars. You go in here, people take cars, there's air conditioning. You're not out in the street so much. Yeah. So is it in shopping malls? And what kind of footfall are you expecting for the region?
Clearly, it will be different here. Here it's going to be more destination-driven as compared to what we know from Europe. But we know it from the US as well, especially on the west coast of the US, where it's also more destination-driven. But what is very important to us when we enter into a new region is the first relocations needs to be right. But it is true, we need parking, we need air conditioning, we need seating, because in this region, people will be in our units, in our bars,
so people sit down
to a larger extent than what you would see in London and New York.
Yeah, the frantic takeaway that we see in London and New York.
Very true.
Thomas, talk to me a little bit about how you look at lockdowns. So we see parts of the world that are still locked down. We see China not 100% opening up. Do you worry about another lockdown affecting your business?
We've been through a lockdown for 2 years. It's been a curse, but at the same time also a blessing, because we learned a lot. We grew extensively prior to the lockdown. And we used then the lockdown to really evaluate what we did well, what we need to do better in the future. We do not want another lockdown. It was a nightmare, but with our people, the commitment from our people, we were ready also at the lifting of the restrictions. But
it was tough. I know it was a tough couple of years. If there were to be another lockdown, how would you adjust the business? Is there already a plan in place?
The thing is, it's like, when we had the lockdown back in March 2020, it was new for all of us. It came all of a sudden with just like restrictions for 24 hours notice. If it happens again, as it did back in November, we had a really good period post-summer up to November, and then the Omicron all of a sudden came over us. We were ready because we'd been there before. We told all our regional directors out in the various markets. They were not shaking they were ready. So, of course, if it happens again, we can do it. And we know we have the plans in place. But it's not what we're planning for.
What's hardest to manage right now? Is it staff? Is it employee turnover? Is it supply chains?
For us, we're all about the people. The culture is in the hearts of everything we do. We can talk a lot about our products. We're very proud of our products, but only if we can serve it with the right people. So therefore, also coming out of COVID, having a lot of people who have not been used to the high traffic in the stores, then that is the biggest challenge, to really ensure that they understand our DNA, they understand our culture, and can communicate that to our consumers. So staffing is the biggest problem. Right?
We know your owners, the owners of Joe and the Juice, have said in the past that they'd be interested in IPOing. Is that on the cards, and what kind of timeline should we be looking at?
We are, as you say, we're private equity owned, so we're always for sale. We're always prepared to go on stage. Public markets, we feel as a management team, also with our owners, as a very feasible way forward for Joe and the Juice to further expand. So among options, it's definitely on the cards, and maybe also in the near future and then further out.
So that's like watch this space, even in these kind of volatile markets?
We are not only looking 6 months ahead, we are looking for the next 10 years. We do believe we can be a category killer in the better for you options segment. Yeah. So therefore, yes, right now it's probably not where we will go public tomorrow, but we need to be ready when the market stabilizes.
All right, Thomas, thank you so much for joining us. Joe and the Juice Chief Executive there, Thomas Norakshay. Now, we'll have plenty more, of course, of interviews throughout the day right here in Qatar, the Qatar Economic Forum in Doha. We'll soon be joined by Boeing's Chief Executive, David Calhoun. Then later I'll be hosting a panel with Gianni Infantino. He's the president of FIFA, as we count down to the Football World Cup here in Doha. But now, I'm off to speak to the Harrods Managing Director, Michael Ward, as the luxury sector adapts also in this post-COVID world of high inflation, Tom.
There we go, Francine. A lot more coming up from the Qatar Economic Forum, getting a gauge on everything, of course, from the recession risks to expansion plans. Thank you, Francine. Plenty more with Francine Lacqua through the hours ahead. Right, coming up. Germany instigates emergency measures to shore up its energy supplies. That's as Russia targets Europe's largest economy by slashing gas supplies. We have more on that story next. This is Bloomberg.
About what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Welcome back to the Open. We are 41 minutes into the European trading day. Recession angst percolating through these markets. European equities off by 1.5%. The futures in the US, the S&P E-minis pointing to losses of 1.6%. Commodities getting crushed. The dollar is bid, as are treasuries with the yields down. Right, let's get the Bloomberg First Word News now with Laura Wright. Laura.
Thanks, Tom. Bloomberg understands President Biden will today call on Congress to enact a gasoline tax holiday as he looks to cool soaring pump prices heading into summer. Biden said earlier this week he was studying whether to back the suspension of the 18.4 cents per gasoline. Average US pump prices are currently hovering around $5 a gallon. The largest party in Mario Draghi's Italian coalition has split after Foreign Minister Luigi Di Maio quit over the party's refusal to back military support for Ukraine. Di Maio says he's leaving the Five-Star Movement, which he used to lead, and will start a new parliamentary group. The current Five-Star leader, Giuseppe Conte, opposes the government's policy of sending weapons to Ukraine. The US is banning the use of anti-personnel landmines by its military around the world. The White House says mines have a disproportionate impact on civilians, including children. The US joins the vast majority of countries which have already limited their use. It says it will work to destroy its stockpile of around 3 million landmines. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom.
Laura, thank you. Okay, let's take a look at some of the things to watch out for today then. 1:30 p.m. UK time. We will have the latest Canadian CPI reading. That's after consumer prices here in the UK came in at a fresh 40-year high, 9.1% for the month of May. Then at 2:30 p.m., Fed Governor Jay Powell delivers his semi-annual monetary policy report to the Senate Banking Committee. Many eyes will be on that testimony. And at 3 p.m., Euro area consumer confidence figures are released. Right, let's go back to some of the key interviews we have been picking up on at the Qatar Economic Forum. The CEO of Volkswagen says the move away from Russian gas supplies is not happening fast enough. Herbert Diess has been telling Bloomberg how the car maker is ramping up production of electric vehicles. He spoke to Anna Edwards at the Qatar Economic Forum.
We're doing very, very well. I think we were within the first to decide and to commit to electromobility, and it's paying off now. We are ramping up plant after plant. We are introducing new EVs. We have a full range, the widest range of EVs in the world market. Latest, I would even say iconic car behind me, which was very, very well received. So we're doing well. We are, in a few days, we are going to groundbreak for our second gigafactory producing batteries, though actually it's no headwind. It's the wind is helping.
On that, okay, a tailwind then, conversely. So are you saying then you're able to find sufficient supplies of batteries? Is that not a challenge?
Actually, we are according to plan. No, we always said that by 25 we would sell about 20% of our product portfolio electric. And we are fully on that plan for ramping up.
Okay, from commodities that you use in the cars to commodities that you use to make the cars, clearly there's a lot of focus on energy supply to Germany and energy supply to many parts of Europe. Are you concerned about the possibility that gas could be cut off either by Europe or by Russia?
I think everyone is concerned, no, because Europe and the northern part of Germany where we are living is especially prone to Russian gas supplies, and it's not so easy to change fast. I think a lot of progress has made, to buying more liquid gas from the US, from other parts of the world. There's a lot in the ramp up, but it's going probably not fast enough if there would be a major disruption. I think everyone is preparing well, though everyone is looking for alternatives. Here at the plant in Wolfsburg, for instance, we still have 2 coal-fired power plants, which are on the ramp down because we are just in the process to substitute with gas, but we have some flexibility in shifting. So yes, we are concerned, but also we are preparing.
But the fallback plan involves more fossil fuels then in the short term?
In the short term, no, not on the long term, because at the end, renewables are becoming so competitive, so cheap, that there is no way around renewables anymore, and they're just more competitive.
The Volkswagen CEO there, Herbert Diess, on their latest EV plans. VW, by the way, down almost 3% today. The auto sector weighing more broadly on the German DAX. It's the biggest loser on an index level in the European space, down more than 2% as things stand. Right, talking of Germany, it is said that country to be preparing to trigger the second level of its 3-stage emergency energy plan. It comes as Russia slashed gas deliveries through a key pipeline to Europe's largest economy last week. For more, we are joined by Bloomberg's Middle East energy markets reporter Anthony Di Paola. Anthony, this morning we heard from the IEA as well, speaking at least to the Financial Times, saying that Europe needs to do more to prepare for a full cut of Russian gas supplies to the continent. Where are we in terms of trying to brace ourselves for any potential 100% cut in Russian gas supplies? And what are the likely implications if indeed that does happen?
Well, we're not close in terms of being able to brace ourselves for a full shutdown of European gas, Russian gas, excuse me, into Europe. Europe has become so dependent on Russian gas. It's been the main exporter into Europe, so that a complete cutoff now, Europe would be completely unprepared for that. Steps are being put into place in terms of new gas import facilities, LNG facilities, new contracts. We've seen even some German companies in the last couple of days making some contracts with Middle Eastern countries and for some U.S. gas. But these are longer-term solutions that are going to take a couple years to come into place. speaking to some analysts over the last few days, a lot of them are saying they don't see a full cutoff because it is still in Russia's interest to sell some gas into Europe. So it would go against Russia's own interest to cut off that source of income. So there's still potentially some kind of negotiation realm there for the Russians to kind of use that as a carrot or a stick. Some of the analysts that we're talking to are saying they don't see that completely, but for sure it would be a big issue for Europe.
Okay, Anthony, what do you see are the main factors within the oil markets at this point? We saw that 7% drop. We went from about 120 down to about 110 on Friday, get back to about 112 on Monday, Tuesday. Now we're back down to 109 on Brent, a drop of 5%. What is going on? Is this just recession concerns, or are there other factors at play?
There are a lot of factors in there. The thing that's been pushing it up has been this uncertainty around the war in Ukraine, brought on by Russia, as well as those supply issues. And then what's pushing that down are these issues about the continued COVID lockdowns in China, doubts about how long that's going to stay on. We've also got a lot of recession concerns in the economy. As the dollar rises, that's making oil a lot more expensive for a lot of those consuming countries, and that's going to hurt their ability to continue to buy oil, and that's potentially going to drive down their consumption in the future. So we've got these concerns, these longer-term concerns about recession and oil demand. However, you know, people are looking at China coming back later in the year. They're looking at the continued recovery of jet fuel demand, and that's really going to cut into the supplies there. So that is a concern going forward. You mentioned earlier the IEA. They put out a report today saying, talking about investment, how investment is going up, but not enough. The IEA was really talking about renewable energy investment, saying that that's not enough of those additional oil company profits are not going into renewable energy, and that's again another long-term solution to this problem of energy supply and issues that we have. But we also spoke to the IEF yesterday, and they were saying that there's not been enough investment going into oil and gas to keep supply up, and this year is likely to be another sluggish year for oil and gas investment because of those concerns that I talked about, recession and COVID lockdown. So we're looking at a difficult landscape going forward.
Okay, Anthony, Bloomberg's Anthony Di Paola on the volatility in these energy markets. Thank you. Now, coming up, Boeing President CEO David Calhoun at the Qatar Economic Forum. That interview is next. Stay tuned. This is Bloomberg.
Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to the Open. 53 minutes into the European trading day. Risk off is the sentiment in the session today. Losses of 1.6% across your benchmark here in Europe. Right, sustainability in the aviation industry is set to be among the main themes as airlines look beyond the damage of COVID and deal with pent-up travel demand. Let's head over then to Guy Johnson, who is on the ground at the Qatar Economic Forum and is joined by one of the aviation industry's top players. Guy.
Yeah, we're joined by the CEO of Boeing, the Boeing company, Dave Calhoun.
Guy, good to be with you.
Let's talk about where we are. We've seen, obviously, a huge boom in travel post-pandemic. How sustainable do you think that is?
Well, by all appearances, it looks sustainable because the increase in demand and the bookings, as articulated by pretty much every customer we have around the world, suggests that when a flight gets canceled or supply is reduced, that the bookings just move out another month. Yep. In other words, the demand remains, and it's really supply trying to keep up with demand.
Well, let's talk about supply. It has been a major issue, not only for your customers, but also for you. When is this supply chain shortage of labor, bits, you name it, we're short of just about everything. When do you think it's going to be fixed?
Well, it's not clear to me when it gets fixed, but the planning horizon that we have to attend to would suggest it doesn't get fixed until probably the end of next year.
Wow.
And the real issue, we have a very large, sophisticated, and somewhat fragile supply chain behind the airplane manufacturers. And just as fragile, it turns out, are the operators themselves, the airlines, and the ability to staff up with pilots, the ability to staff up the ground crews, maintenance crews, etc. Hardly a week goes by where you don't see some implication of them not being able to keep up with that supply side. And so I believe this is going to last for a while.
Fed Chair is going to be joining the Congress a little bit later on. He's going to be giving 2 days of testimony on Capitol Hill. The emphasis at the moment is on the Fed. The president's putting the emphasis on the Fed to deal with this inflation that we're seeing right now, this supply side problem, the bottlenecks that we're experiencing. Do you think we need a recession to fix some of this?
I won't use the word recession. I'm not sophisticated enough to do that. On the other hand, slowing things down a bit, I think will be helpful to a lot. Now, it doesn't affect every industry equally, but like in our case, where you do compete with other industries on certain disciplines, software development, data analytics, computational work, etc. In those instances, if we see a softening of demand, it will be helpful to us with respect to the retention of our people, as well as the recruitment of new people to deal with growth.
You've had some huge operational challenges. The MAX program obviously has been one of them. The 87 program, we still don't know where the 777X is ultimately going to go and when that's going to be certified. Dave, have you got a grip on this? Do you feel you've got a handle on what is happening and the kind of timeline you're looking at to fix some of these problems?
I absolutely feel like we have a grip on it because we've been very deliberate about the fixes and our attention to detail and documentation with the FAA, our counterparty, and we've made steady progress every step of the way. Most importantly, we've been transparent with everybody every step of the way. Our customers, the FAA, EASA, regulators around the world, and while that's uncomfortable, that was always necessary to regain the trust of the flying public. They needed to know we were that.
Do you think you have the trust of all those stakeholders? Do you think you still need to do more to rebuild it?
You always have to do more. The minute you don't think you have to, you lose grounds. On the other hand, I think we're gaining on it. And I'm confident that the processes will end well, that the MAX, which has already been brought back into service and is performing incredibly well, the 87, which when it comes back, as determined by the FAA, will be an improved version of the 787. Simple as that. Will it be any safer? Probably not. But will the quality and the attention to detail and all the things we have to do with our regulator to make certain we have trust on both sides of that will be great. And I feel good about what we gained in that process.
Let's talk about real estate. you're going to be moving the headquarters down to DC from Chicago. Does that send the right message, do you think, to those stakeholders we've just been discussing about your attention to detail, about needing to be close to the factory floor, to the lines that are making these aircraft, to have the oversight, to know what is happening, to know that you're on the right track? Does moving to DC send that message?
Yeah, it's very interesting, Yi. The irony in that is the decision with respect to our headquarters operation was made probably my second or third week on the job back in 2020, when we asked all of our operating leaders, our chief engineer, chief manufacturing, chief supply chain, to go move back to their people and as close to the work as they can possibly get. So that decision was rendered almost 2.5 years ago, and ultimately the decision we made to more or less rationalize a footprint in Chicago and move a couple of people, basically me when I'm in the headquarters office and our CFO to DC, that was pretty much the extent of it. We're very happy to be in Washington, DC. Our biggest customer in the world is right across the road in the Pentagon. We have regulators we do have to attend to. We have legislative voices that we have to attend to. And yes, we still spend most of our time on the road, in our factories, and with our engineers.
The criticism is, though, coming from CEOs of some of your biggest customers, MOL, Michael O'Leary, Ryanair. There are plenty of others that are saying that the company still does not have the trust of its customers at this point, that we need changes, that the company needs to get a better grip, a better handle on what is happening. There are still frustrated CEOs out there that are trying to buy your airplanes, trying to get them in the configuration that they want, and they're not getting them. Does that give you pause? Normally that doesn't happen. Normally CEOs don't talk to other CEOs in this way.
Well, in our industry, in my experiences, they actually do.
Okay.
Because they're very attentive to detail, as they should be. And when they're disappointed, and they voice their concerns. And the people and the voices who have expressed those concerns, I take very seriously. It'll always give me pause. We have serious discussions inside our company. On the other hand, at exactly those very same moments, we had other customers who were expressing extreme faith in our company, extreme faith, placing real orders for real airplanes to be delivered here in the future, placing orders for new technologies that we will deliver in the future. So we get it from both sides. I take all of the complaints very seriously. They've made by great operators. And in a supply-constrained world, we're going to have to face into that music, because that is what ultimately disappoints us when we can't fulfill an order at exactly the moment they want it fulfilled, and it kills them because they can't put that airplane into service when they need it. So that's a real story, and we try to pay attention to it each and every day. And for the next year, as we face into supply constraints, our industry is going to have a few more of these stories.
Is the drip, drip, drip of tough news that has come out of Boeing, are we done with that?
You're never done, but yeah, I think the drip, 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 and most importantly, the most important issues we had to contend with respect to the faith of the flying public, specifically related to the MAX. Yeah, I think we're pretty well through that. I think the flying public has been with us now for quite some time. Our customers have faith in the airplanes, and yes, we have to deliver 787s. Yes, we have to certify the 777X, and I believe we will.
Final question, you mentioned new technologies. Looking ahead, when you talk to your engineers, what do they see? We discussed this just on stage just a moment ago. Are we gonna be sticking with the tube and the wing? Is that what the model looks like going forward? How broad is your thinking in terms of what the technology needs to look like to get us to the kind of sustainability targets that airlines are setting right now?
Yeah, so I'll differentiate the airplanes that are now completing the certification process, which were largely derivatives of prior models, from what's the big next one. And our team is focused on, one, the tools required to develop an airplane in this day and age, largely digital modeling, modeling the factory floor, modeling the service orientation, et cetera. But maybe more importantly, it has to have a sustainability wrapper all around it. It just does. A lot of technologies we can bring to bear. Sustainable aviation fuel is already a big one. As we've said, in 2030, every airplane we deliver will be capable of flying on 100% sustainable aviation fuel, but there's more to do going forward. So I would look for a sustainability wrapper as the differentiator relative to our history in differentiating airplanes.
Dave, we're going to wrap it up there. We're going to be talking to one of your biggest customers next, so I'm looking forward to that conversation. But it's great to see you here at the QEF. We really appreciate your time. Dave Calhoun, the CEO of the Boeing Company. And as I say, what do we got coming up next? IAG CEO Luis Gallego is going to be joining us from the QEF. He just placed a huge order for that 737 MAX with Dave's Boeing Company. We'll have that conversation next. This is Bloomberg. We'll talk more about the markets. We'll talk about what is happening. This is the picture right now, as you can see. We've got a stock 600 that is trading down by 1.6%. We are seeing certainly a little bit of nervousness, both in terms of what is happening in the stock 600 and futures going into the Fed. Fed tightening is going to be the story of this afternoon. Are we going to see a recession? We've just been talking to Dave about that. That is the big focus as we go into the Powell testimony a little bit later on. This is what some of our guests have been talking about on that very subject.
A recession is inevitable at some point.
It's almost unavoidable. I got to think that the odds are that there's going to be a recession. Seeing a cooling of the economy is something that we believe is appropriate.
As to whether there is a recession in the near term, I think that is more likely than not.
We're going to have kind of a tough period here.
Our economists, as you've noted, this morning have increased their odds of a recession this year, but really more focused into next year.
If we can stabilize the energy market, I believe when the Fed does their job, we'll have inflation under control. Inflation's not going to cure itself.
There will be, again, more surprises and more shocks coming from central banks.
I think this inflation is quite bad. It's intransigent. It's not transitory, and the consequence will be a recession.
Meanwhile, the Richmond Fed President Thomas Markin says the Fed should raise rates and do so fast, do so as fast as it can, basically, without, though, causing undue harm to markets or the economy.
We are in a situation where inflation is high, it's broad-based, it's persistent, and rates are still well below normal. And so I think the spirit is you want to get back to where you want to go as fast as you can without breaking anything.
Let's talk more about this. Tatiana Puhan, Deputy Chief Investment Officer at Tobin, joining us now from our London studio. Tatiana, what do you expect to hear? The Fed is going to be on deck a little bit later on. We've got 2 days of testimony coming up from Fed Chair Jay Powell. What are you expecting to hear from him?
Well, I think what we should expect to hear from them is that interest rates should go up further, because I think inflation, is a problem that is going to persist. Because of continued geopolitical tensions, because of COVID impacts on this industrial production and so on. So this is going to stay high. But on the other hand, the question is also whether the Fed and other central banks will actually be able to raise rates enough to keep inflation under control, because we also have these mountains of debt, of public debt, that have been created over the last years. And so it's questionable, whether they will really be able to get inflation under control.
What does that mean for markets? How are you thinking about your investment strategy?
Well, I think, after the Fed tried to make us believe that, we had transitory inflation, now they try to make us believe that we will get a soft landing. And, well, personally, I don't believe in this soft landing. So I think clearly we should get prepared for recessionary pressure. And that means for markets that, we will also get market concentration actually reversing. So if you want, markets have concentrated now over many years, and this was really driven by the consumer economy that was growing and growing and growing. And this concentration has only started to come down. So this mean reversion has only started, and it means that diversification, from my point of view, is really the most important thing that investors should think about today, because cap-weighted indices, they're hugely concentrated in very particular types of risk.
If investors have got money, and a lot of them have right now in cash, how should they be thinking about that cash? Is that something they want to hold on to right now? What should they be doing?
Well, I think given, the inflationary pressure that we see, holding cash is also something that, will give you for sure a loss of 8% or even more per year. So clearly that is also not the best thing you can do. What we do see is that investors, they start to think again about investments, for instance, into corporate bonds. So we do see that appetite is coming back for this asset class. And then obviously, when we go into risky assets, we can always think about strategies that use derivatives to sort of overlay the risky asset exposure. You can also think about other diversifying assets. So we have actually been working a lot in the crypto space, so Bitcoin as an alternative standard of value. So there are different strategies that investors could deploy, but clearly holding just onto cash is also not the only solution.
Tatiana, we're going to wrap it up there. Thank you very much indeed for your input today. We really appreciate it. Tatiana Puhan, Deputy Chief Investment Officer at Tobin. Thank you very much indeed. As I said just a moment ago, we're going to continue with our conversations from the Qatar Economic Forum in just a moment. We're going to be joined by the IAG CEO, Luis Gallego. He's going to be joining us next to talk about when we get back to flying as normal. We'll talk about that next with Luis. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
We are all unique. Without diversity, life would be excruciatingly dull. It's something worth celebrating. It's something that makes us stronger as communities, as businesses, and as individuals.
I see the benefits at Bloomberg on a daily basis. It's beyond flying that rainbow flag. It's about taking the discussions out into the world and making a genuine difference.
Welcome back. You're watching Bloomberg Surveillance, the early edition. I'm Guy Johnson at the Qatar Economic Forum. We're in Doha. We're talking to a lot of senior people from the aviation industry. Bloomberg Intelligence says that inflation-beating wage hikes could be needed to smooth out some airline operations over the next 1 or 2 years. We've certainly seen some recent disruption, European aviation markets, certainly showing the challenges facing the region's airlines right now. BI analysts say that passing on rising costs to passengers may be tough going forward. Joining me now to try and answer some of those questions is the IAG CEO, Luis Gallego. Nice to see you, Luis. Always a pleasure to speak with you.
Good morning.
We are having an incredible summer. Everybody wants to go on holiday. They want to go somewhere, anywhere. This is a post-pandemic boom.
Yes.
How sustainable is it?
Okay, I think, as you say, people want to travel after the pandemic, and what we see is that we are going to have a very strong summer. The pent-up demand is there. The premium leisure traffic is in a peak. But as you say, the question is this a bubble? Is this going to continue? What we see now is the bookings that we have for the holiday periods, the end of the year. We have the same trends. So we don't see why this is going to change. COVID, I think, has implied a change in the behavior of the customers. We see that now the people, they want to fly not only for holidays, but also they are ready to work from different places, and they are ready to combine business with leisure. So we need to see how all this is going to combine together.
So we don't have a demand problem, but we do have a supply problem.
Yes.
You are short of people. The ground handlers are short of people. There's no baggage handlers. Air traffic control has issues. When do those issues get resolved?
Okay, I think it's a difficult situation that we are living in different regions of the world. For Europe, we have Amsterdam, we have Frankfurt, we have London, that they're having a lot of problems. I think in the US, they had the problems last year because they have a huge domestic market that we don't have. But there are some places like, for example, Spain, where we don't see the problems. So we don't see the problems because we had a furlough scheme that we could use to adjust the size of the labor force to the capacity we were flying. In the case of UK, I think the situation is worse than other places. The main reasons, first of all, is that we had a lot of changes in the policy about the traffic light system, etc. I think now the labor market is reduced, so it's difficult to hire people to work on the ground, as you are saying. But I think we are adjusting the capacity in order to give resilience to the operation during the summer. And our idea is that to reach the end of the year with an operation that can be comparable to the rest of airlines that we have in the group.
So by the end of the year, you think you're going to have it under control again?
Yes.
In terms of what you think the summer is going to look like, though, more specifically, we are in the midst of a train strike, rail strike here in the UK. There is talk that that could broaden out. Do you think that could end up affecting you?
I think we are going to see strikes during the summer because everybody has suffered a lot during this crisis. So in our case, for example, all the employees, they have reductions in salary. They work a lot to be where we are right now. In some cases, like in British Airways, we needed to let 10,000 people to leave the company. Yep. So it has been very tough. And now we are in a situation where after COVID, we have a high inflation and the people, they want to see what happens in the future. So it's a difficult time because we need to talk to them, but in some way we need to link the recovery of the company with the recovery of all of our people. And that's the challenge that we have in front of us. But I think it's going to be, in general, not only in aviation, a tough summer with possible strikes.
You talk about the inflation rate that we're seeing. One of the areas we're certainly seeing an inflation rate that is very high is in fuel. Jet fuel has basically doubled in price. Does that mean the fares are going to stay high? Do you expect these fuel prices to remain for quite some time? I saw Scott Kirby at United. These kinds of prices are now his base case. Does that mean fuel is going to translate into higher fares for quite some time?
Okay, I think our projections for next year is that the fuel price is going to be a little lower, but we don't have a crystal ball. We don't know what's going to happen. What is true is that we have a hedge position. This year we have above 70% of the fuel hedge. Next year we only have 25%. The most important thing is your competitors, how they are. You have people that they hedge, you have people that they don't have any hedging. So I think if at the end we arrive to a situation with high fuel price and no hedging, for sure we will transfer the cost to the price, to the fare.
And you think the customer will take that?
I think we had periods in the past with high fuel price that we had very good profitability for the airlines. So at the end is how you can compete with the others. And what we see now is that the people, they are ready to pay more to fly after the COVID.
One of the implications of this high jet fuel price could be a change in tack when it comes to sustainable aviation fuel. The spread between the two has narrowed considerably as a result of the higher jet fuel prices that we're seeing right now. How does that affect your path, your thinking towards turning your airlines into more sustainable operators? Does it accelerate it? Does it slow it down? I'm wondering how you're thinking about this high jet fuel price and what it means for SAF.
We, in International Airlines Group, we were the first group of airlines worldwide to commit to net zero emissions in 2050. and we define a roadmap to arrive there. I think it's going to be a combination of new technologies, new aircraft, possible hydrogen aircraft, sustainable aviation fuel, carbon offset, carbon capture, improvement in operations. So we have a lot of things that we are doing to reach that objective. We talk about sustainable aviation fuel. We have an objective to power 10% of our flights with sustainable aviation fuel in 2030. And what we are doing right now is to invest in different companies in order to have this 10% that we need, and we are buying sustainable aviation fuel right now. The problem we have is that there is not enough sustainable aviation fuel, so we need to have the
So if more was available, you would buy more?
Yeah, yes, we will buy more, because I think we are going to have a shortage in the future unless the government, they decide to invest in new plants of sustainable aviation fuel. For example, to achieve the objective of 10% that we have for sustainable aviation fuel in 2030, we need around 30 plants in Europe to produce that. So we need the right policies to invest in sustainable aviation fuel. Otherwise, it's not going to be a question of airlines.
We don't have the right policies now. At the moment, a lot of the feedstock that could go to SAF goes to sustainable diesel. How do we fix that?
I think what we need to do is something more similar to what they are doing in the States, that they are putting incentives to build plants of sustainable aviation fuel. I think in our case, now we are in the middle of the packages like the Fit for 55 in Europe. And I think what we see is that we talk more about taxes, and I think that's not the solution. The solution is to have the capacity to invest in technology, to invest in new plants in order to produce the sustainable aviation fuel.
As you say, you've been leading in this process.
Yes.
Great to see you doing that. Luis, thank you very much indeed. We really appreciate your time joining us here at the Qatar Economic Forum. Luis Gallego, CEO of IAG. What have we got coming up for you? Paramount Plus launches today with content including the Mission Impossible franchises and Star Trek. We are going to speak to the company's CFO, Navin Chopra, a bit later in this program. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance, the early edition. I'm Guy Johnson at the Qatar Economic Forum in Doha. Let's get an update on what you need to know. Here with the first word news, Alice Atkins.
Hi, Guy. Germany is said to be preparing to trigger the second level of its three-stage emergency gas plan. In a move that may mean higher prices for industry and households, the government could move from the early warning stage to the alarm stage. Europe's biggest economy is seeking to reduce gas use after Russia slashed deliveries through a key pipeline last week. Bloomberg understands President Biden will today call on Congress to enact a gasoline tax holiday as he looks to cool soaring pump prices heading into summer. Biden said earlier this week he was studying whether to back suspension of the 18.4 cents per gallon tax. Average US pump prices are currently hovering around $5 a gallon. The largest party in Mario Draghi's Italian coalition has split after Foreign Minister Luigi Di Maio quit over the party's refusal to back military support for Ukraine. Di Maio says he's leaving the Five-Star Movement, which he used to lead, and will start a new parliamentary group. Current Five-Star leader Giuseppe Conte opposes the government's policy of sending weapons to Ukraine. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Guy?
Alice, thank you very much indeed. We're all waiting for the Fed. The Fed chair is going to be speaking on Capitol Hill a little bit later on. What kind of a message are we going to be getting? Stock market's dipping a little bit. The recession fears are definitely there. Take a look at what is happening with the Stock 600 right now, and you'll see that very clearly. We're down by 1.74%. S&P futures are down by 1.8, so we're looking like if we're going to have a fairly negative open, but I think it's going to be a reasonably bumpy day. The dollar is bid going into that testimony. Pay attention to that, and you are seeing the US 10-year yield. We're catching a little bit of a bid, so yields coming down a touch, but look where we are, still 323. We've been higher than that. Does the trajectory change as a result of what we get today from Fed Chair Jay Powell? Coming up, there's a new streaming service vying for your attention if you are in the UK. Paramount Plus launches today with content including Mission Impossible and Star Trek. We're going to speak to the company's CFO, Navin Chopra, is coming up next. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your just soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Wherever you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
As fast as possible, Richmond Fed President Thomas Barkin says rates should be raised rapidly as Jay Powell prepares to testify in the Senate. Stocks tanking in the first hour of European trading. Futures don't look too clever stateside either. Oil follows, equities, crude dropping with economic concerns certainly in focus. President Biden gearing up for showdown talks with industry executives later today. And UK inflation hitting a new 40-year high, 9.1%. Food and energy prices are surging. The pound slips against most of the major currencies out there. Good morning, everybody. Welcome. You're watching Bloomberg Surveillance, the early edition. I'm Guy Johnson. We're live at the Qatar Economic Forum in Doha. Let's turn our attention, though, to what is happening in the entertainment industry. I want to return to Danny Berger in London. Paramount's opening up a new frontier in the streaming wars. Let's find out what's going on. Danny, over to you.
Yeah, Guy, to set the scene, Netflix, it's been streaming in the UK for about a decade. Disney Plus, they launched at the onset of the pandemic. Apple TV Plus debuting in 2019, and now there's a new streamer on the block. As you were saying, Paramount Plus launches in the UK today with over 8,000 hours of content, including Star Trek, Mission Impossible franchises, and the smash hit Yellowstone, which I should say, the Bergers, my parents, absolutely adore. Joining us now is Naveen Chopra, the CFO of Paramount. So, Naveen, first, thanks for joining. So, why is 2022, why is that the year for Paramount Plus here?
Well, we're just incredibly excited to be launching Paramount Plus here in the UK. The UK has been a very important market for the company for many years. We've been a big content creator and content distributor here, both by way of our free-to-air channels as well as our paid television networks. And now we're extending that with the launch of Paramount Plus here, which, as you pointed out, is going to bring 8,000 hours of content to the market, including big global tentpoles like an 1883, like Halo, but also a really compelling selection of local content designed for the UK market, over 20 original programs coming here.
But to be fair, I mean, your competitors are already here. So is the pie getting bigger, or are you taking market share?
We see Paramount Plus as being very additive to options that consumers already have, but also very distinct. We bring to the table a much broader offering with content for everyone. It's not just about high-end scripted dramatic entertainment. It's about the full spectrum of kids programming, of unscripted and reality programming, of news, live events, and in many markets we actually even have sports as part of that equation, and of course movies from Paramount Pictures. So it's a very distinctive, broad content offering. And it's also at a very compelling price point, which in today's market environment, we think is a great asset.
Well, let's get into that, because it does feel like this precarious time to ask consumers to add on more, to pay more. If you have a cost of living crisis here, folks are back outside. They're not indoors constantly streaming. Streaming hasn't really been tested historically in this type of downturn. How do you combat those market forces?
Well, historically, home entertainment has actually been very resilient in times of economic uncertainty. And the reason for that is that television viewing and even movie-going provide tremendous value relative to other forms of leisure and entertainment.
But is it fair to say streaming, it hasn't really been tested in the same way? I mean, it's a different form of the historical corollaries.
Perhaps, but if you think about it, the value that you get out of streaming for, in the UK, £7 a month, be able to watch incredible, high-quality content anytime, anywhere you like, it's very compelling relative to other things that consumers may need to spend money on. And so we're actually quite bullish about streaming adding to the resilience of the broader home entertainment.
Okay, talk to me about how bullish. You got, what, 40 million subscribers as of the first quarter. How much do you think UK is going to add to that?
Well, we haven't announced any specifics around the UK, but we are on a path to achieve over 100 million subscribers on a global basis by the end of 2024. We have 40 million Paramount Plus subscribers at the end of Q1, as you mentioned, over 60 million subscribers across the full portfolio of our D2C services. So we're very bullish. The UK is going to be a big part of that. And it all is driven by our content portfolio, which we think is second to none.
How expensive is it to acquire customers in the UK, given that you do have to launch at a competitive price point? Is there some element of loss leading in the UK, at least for the time being?
Well, we think it's all about having a very smart and efficient approach to acquiring customers. And for us, that means not being entirely dependent on the direct-to-consumer model, which is something that was very much in vogue a couple of years ago. We have taken a broader approach to distribution. Direct-to-consumer is one part, but we've also embraced partners. We have a very exciting partnership with Sky coming into the UK, where Paramount Plus will be bundled with the Sky Cinema tier. That's an incredibly efficient way of acquiring millions of subscribers that have lower churn than the D2C model. We also continue to embrace the channel store models with partners like Amazon and Roku and Apple. So,
which of course, Amazon, you have history at as well, so you know that market well. I do have to ask, though, beyond just partnering, are acquisitions in this market interesting? The UK government preparing a sale of Channel 4, any interest there?
Well, we're big fans of the UK market. We're big fans of the broadcast model here. We've had tremendous success with Channel 5 since we acquired that a few years ago. We've been able to grow share. We've been able to create, I think, some very compelling content. Nothing that we think we need to do. We like the portfolio of assets that we have in the marketplace. But
not need to do, but want to do, perhaps?
We always look at interesting ideas. It's, I think, early in the process with Channel 4 to really know whether that's going to be of interest. But, you know, we're big fans of this market, and we love the hand that we have here today.
You know, it's interesting. You talk about sort of the range of types of shows you have. Do you think you need this idea of one standout show to draw people in? Less than a minute here. And if so, tell me, what show is it going to be?
Well, as I said, we like having a broad content portfolio, but we have definitely seen some of our shows create incredible excitement in other markets. Halo is huge on a global basis. 1883 has just been a huge hit for us in the U.S. We're looking forward to bringing all of those to the UK market, plus big movies from Paramount Pictures, and of course, great local UK content.
Yeah, I heard there's a recent big movie out there. Maybe starts with a top and ends with a gun, so certainly.
And has generated over $900 million in box office revenue. So that will come to Paramount Plus eventually, and it's an incredible movie.
And we didn't even talk about Sylvester Stallone. Naveen, I'm afraid that's all we have time for. Thanks so much. Guy, that's the CFO of Paramount, Naveen Chopra.
I haven't seen it yet. I'm really excited to see it. My whole family's excited to see it. We're going to be seeing it soon. Let's put it that way. When I get home, that is definitely top of the list. Danny, great stuff. Really interesting interview. Thank you very much indeed. Paramount launching in the UK. Up next, we're going to talk about travel a little bit more. The Accor Chair and CEO Sebastian Bazin is going to be joining us here at the Qatar Economic Forum. That interview next. This is Bloomberg.
what's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
This is Bloomberg Surveillance, the early edition. I'm Guy Johnson at the Qatar Economic Forum in Doha. This morning's UK CPI number only just underscores the cost of living crisis that many families are facing. It's hurting demand for some things. Is it going to hurt demand for travel, though? At the moment, we are seeing a huge boom in travel at the moment. How long does that last for? Well, let's try and get an answer to that question. Sébastien Bazin is the CEO of Accor, Europe's largest hotel company. There are many questions that I can ask you at the moment. Yeah. But let's start off with the big one. We're all out. We want to go somewhere, anywhere, as a result of being locked up for the pandemic. How long does this boom in travel last for?
Well, let's start with, I've been waiting for that moment for the last 2.5 years.
Yeah.
We went through hell for the last 2.5 years. So finally, I have a tailwind. So it's going to last as long as it could. My prediction, certainly for an extra 12 months. So until summer next year, because people have money on the saving accounts. They want to get control of their life. They want to have a better life, and they want basically to have fun with friends and siblings. So for the summer, incredible. Until Christmas season, probably very strong. Then, if you hit a recession, inflation, and whatever we know is coming, how impactful that's going to be to the tourism industry, I don't know. I believe probably not as much in the past recessions, because something has changed post-pandemic. Now 60% of the travelers happen to be leisure and domestic. Less than 2 or 3 hours from your home by car or by train. So that's an easier travel, less cumbersome, less expensive, and a different type of travel. So when you have a big recession, what's being impacted first is international travelers. Yeah. And we're going to be less and less depending on international travelers.
You sound pretty convinced that we're going to get a recession, though.
Well, you know, it's going to be a self-prophecy. People even talk about it. Yeah. I'm not sure there is. If we get our minds together, all the European Union's G7, G20, it might not occur as bad as people think. But
one of the reasons we might get a recession is because the supply side of the economy continues to struggle. Everybody in leisure is experiencing the staff shortages that are showing up at airports, at hotels, in restaurants, you name it. Everybody seems to have the same sort of problem. How long is it going to take to fix that problem?
I'd better find a solution very soon. We're missing 10 or 15% of the staff we had before. France alone, we're missing 360,000 people in hotels, bars, restaurants. That's not Accor alone. Accor alone, I'm missing 4,000 people. So that means probably 3 or 4 million people missing in hospitality in the world. And they're not missing because of underpay. That's not the main reason. Okay. The main reason, which is tough to fix, people have left the industry because they wanted to be away from sacrificing weekends, nights, and they want to find a job when they can work remotely.
So how do you solve that?
It's difficult, because when you work in a hotel, you're not going to be working remotely, my dear. You'd better actually be there at the reception or at the kitchen. So it's probably the solution, which I've been working on there, which is a tough one. People, you're going to have to accept to have people working for industry only 2 or 3 days a week. And then so on Sunday, Monday, Tuesday, they're going to work for Accor. On Wednesday, Thursday, they're going to work for a tech company. And then they could be self-employed on the remaining 2 days. So I need to readapt in terms of labor legislation, in terms of human resources, in terms of training. I'm going to be training people only for 2 days. But people will accept those sacrifices if it's only for 2 or 3 days. It's a total revolution on the way you interact with people. But doable, absolutely doable.
That is doable, but it's, as you say, going to take a while to shift the regulation and the mindset, both of governments and industry.
Flexibility is the key word for it. You talk to everybody today between 17 years old and 30 years old. Don't even tell them you're going to be working for me for 20 years. They simply do not want to work 20 years in the same company.
They want to be able to basically choose and have flexibility and sense of purpose. We have the purpose. We can give them flexibility, and I need them. So I'm actually going to be on my knees trying to charm them. I need to be, because my hotel is going to be booked, and I need those clients to be serviced.
I have no doubt that you'll be capable of charming them. There are a lot of hotels coming online at the moment, particularly at the high end of the market. Are we going to end up going from a situation where we have not enough to too many?
Probably not. What people are severely mistaken about the hotel industry, for the last 40 years, I heard that for the last 10 years I've been chairman of Accor. But if you look at the numbers of hotels in the world, the increase of supply is between 1% and 2% per annum. The increase in demand has been between 2.5% and 4% per annum. So this is the only industry of any size where you have a demand which is exceeding supply for the last 40 years, probably remaining for the next 10 years. What happened though, you have a lot of hotels non-performing because they lost their identity, because it hasn't been refurnished. Those hotels still exist, but they no longer perform. So a new hotel with a new design, new concept, new identity will take the place of an existing one. That guy's going to die, or it's going to be disappearing. So no, don't be too much worried about oversupply, because the facts actually tell you the opposite.
Talking of new hotels, you got what, 2 opening here, about to open here before the World Cup?
6 opening here before the World Cup.
You got 6 opening here,
in addition to 12 existing. They better be ready on time. I promise.
Okay.
I promise, they have to be open by.
You're confident. The World Cup's 4 months away, and I'm still seeing a lot of building work happening here. You're confident that you're going to be ready?
Yes, I told you it's a must. I mean, we happen to be the largest hotel operator in Doha, in Qatar. No, they will be ready. They will be just ready, but they will be ready. So you're gonna have, you'll be having reception, food and beverage. You may not have all the rooms ready, but you will never notice it. But they will be fine. It's going to be a great World Cup. I guarantee you this. I am very close to this country for the last 32 years. That country will shine during the World Cup.
I'm looking forward to the football as well. Really quite excited about that. Final question. We've just seen a French National Assembly election that has produced a divided parliament.
Yeah, that's an understatement.
I'm trying to...
It's a mess.
Okay, it's a mess. The president's going to struggle. What does that mean for the way that you're thinking about how you're going to interact with the government going forward? What does it mean for France?
Well, it means for France that I guess we'd better have somebody fixing an agenda, be a better listener, and embarking those who actually have the same idea. We need reforms, we need a firm hand, we need a leader, and we need people to think collectively as opposed to only looking at their own turf. I think they have enough resources between Republican Party, between his party, Renaissance. I think it's going to make it happen. But it's true that I guess you're going to have a lot of people being unhappy about it, but there's no other option. Somebody has to lead, somebody has to decide, and somebody has to know he will not be well loved in this country. That's okay. This means he means to be a leader. Otherwise, don't do that job. You know, a lot of people are not going to like you. That's okay. So, and he has the bones. He can do it.
He can do it. He has that skill set within him to be able to make that happen.
Yeah, he probably did not wish for what's happening now, but it's been happening. So it's now he has to, again, listen better.
Sebastian, great to catch up with you.
Thank you for being
Thank you very much indeed for your time this morning. We really appreciate it. Sebastian Bazin, the CEO of Accor. Okay, let's catch up with what we need to know here with a business flash. Leanne Garrett.
Shares in Germany's Bayer tumbled after the US Supreme Court rejected a multi-million-dollar appeal from the company that it should be shielded from legal claims that its Roundup weed killer caused cancer. The justices left intact a $25 million award to a Californian man who said decades of exposure to Roundup caused his lymphoma. Richmond Fed President Thomas Barkin says the Fed should raise rates as fast as it can without causing undue harm to markets or the economy. Barkin does not vote on monetary policy this year, but says he supported the central bank's 75 basis point hike earlier this month. He says the US central bank may need to raise rates beyond neutral and into restrictive territory.
We are in a situation where inflation is high, it's broad-based, it's persistent, and rates are still well below normal. And so I think the spirit is you want to get back to where you want to go as fast as you can without breaking anything.
Volvo's Chinese owner is going public via a blank check merger with special purpose acquisition company Gores Guggenheim. The SPAC says it expects to close the deal on Thursday, while the Polestar stock to start trading Friday under the symbol PSNY. The transaction should raise at least $850 million to help fund future models. And that's your Bloomberg Business Flash. Guy?
Alice, my apologies. Sorry about that. Thank you very much indeed. Alice Atkins with the Business Flash. Quick look at where we are with markets. As I've already indicated, we're waiting for Powell later. That is the narrative that is really going to define the day, probably the rest of the week. He speaks today, he speaks tomorrow as well. He's starting a little bit earlier than normal, actually, 9:30 Eastern. Be interesting to see whether he actually starts on time today. In terms of what we're seeing in the markets right now, you have got equity markets giving back some ground. Stock 600 down by nearly 2%, trading just north of that 400 mark. Keep an eye on that level. For the futures, stateside, 36.99. We're down by 1.82%. So we're soft going into Powell. The dollar is bid. Brent, though, take a look at what is happening with Brent. Brent's on off. We're trading 110.40 right now. We're down by nearly 4%. So you're going to see a ripple across into some of the energy stocks throughout the day. They've been some of the big winners throughout most of this year. We're starting to see some real volatility creeping into that segment of the market, though, which is maybe going to shake some investors loose. We'll see what happens there. We're going to talk about what is happening with energy a little bit more coming up next. Germany starting to instigate emergency measures. It's trying to shore up its energy supplies as Russia targets Europe's largest economy by slashing gas supplies. We're going to have more on that story next. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
So this is Bloomberg Surveillance, the early edition. I'm Guy Johnson at the Qatar Economic Forum in Doha. Let's talk about what is happening with energy prices. Germany is said to be preparing to trigger second levels of its three-stage emergency plan. This, of course, comes as Russia slashes gas deliveries through key pipelines into Europe's largest economy. Big news on that front last week. We're joined now by Bloomberg's Middle East energy markets reporter, Anthony DePaola, to give us a take on what is happening here. Anthony, talk us through the impacts of this new German plan. What does phase 2 actually look like?
Good morning, Guy. The issue really is that Europe doesn't have a solution for a full shutdown of Russian gas supplies into Europe at the moment. They're so dependent on the Russian gas supplies for everything from energy, power plants, chemicals, fertilizers, that there's no real replacement in the immediate term for this. So we're looking at longer-term solutions. Germany's already gone ahead and recently contracted some U.S. natural gas. They've been in this region in the Middle East talking about getting some natural gas from the UAE, from Qatar, from other countries here. Those are longer-term supply issues, though. What's really at stake right now is kind of kicking the can down the road into more the winter months, because in this period, what's really important for Europe is that they're able to get that gas and fill up their storage facilities, which would allow them to have excess gas to use in the winter when it gets cold, when they really need it. What's happening now, as you said, with those reduced flows from Russia, the European countries are not able to fulfill those storage tanks, and that's going to be a problem as we get into the winter months. So we're going to see that further down the road as well, Guy.
Why is Brent down today?
Yeah, there's so much going on in the oil markets right now, Guy, with many different factors. We're looking at a tight supply that's keeping the prices where we are, elevated over 100, but those concerns about the recession, about continued lockdowns in China, the potential that this recession will hurt demand going forward, that's a concern for the oil markets. Also, with the dollar high as it is, that's hurting consumer power in some of those consuming countries. And again, that's compounding those issues of the high oil prices and potential demand destruction in those countries, Guy.
Okay. Anthony, great stuff. Thanks for the update. Really appreciate it. Anthony DePaola on what's happening in the energy space right now. That just about wraps things up from me. Coming up, Early Edition continues. Matt Miller, Kaylee Lines in New York, Anna Edwards, of course, over in London. That's all coming up for you. We're counting you down to Powell. This is Bloomberg.
Of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali, sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe sampai dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
We are expecting the economy to contract this quarter. So we are certainly not in denial.
I think in hindsight, we spent too much money and too much fiscal response.
You want to get back to where you want to go as fast as you can without breaking anything.
We need more money to plan for the second pandemic. There's going to be another pandemic. We have to think ahead.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Wednesday, June 22nd. Our top stories today. Fear of a recession is shaking markets again today. U.S. futures and European equities are down. So are oil prices and other commodities. President Biden tries to ease the pain at the pump. Bloomberg's learned he'll ask Congress to enact a gasoline tax holiday. And optimism is evaporating that there can be a soft landing for the U.S. economy. Investors are waiting to hear Fed Chair Jerome Powell's Senate testimony on fighting inflation. Meanwhile, Richmond Fed President Thomas Barkin says the central bank should raise rates as fast as it can. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Kaylee, yesterday we saw risk appetite return. Today looks very different. Today, concerns about the global economy sticking to commodities and sticking to global stocks.
Absolutely. The rebound of yesterday looking very short-lived, Anna, as you saw stocks falling really across the world. A sell-off that started in Asia. The MSCI Asia-Pacific Index as a whole down about 1.7%, but the declines really were most severe for big Chinese technology stocks. As a result, the Hang Seng Tech Index down more than 4% overnight. As Anna alluded to, the concern really is around tightening monetary policy and the implications for growth globally. Of course, because of that global growth concern, that translates into concern around commodities demand, and particularly for iron ore, the concern is China. You actually have seen iron ore prices fall 24% in just the last 2 weeks. It was down about 6% for those futures in Singapore overnight. At the same time, you are seeing a bid coming into haven assets like global bonds. In Australia, the two-year yield was down 14.5 basis points overnight after a more than 12 basis point decline yesterday. Right now, it's sitting just around that 3% level. And finally, I would note that the yen is actually the lone Asian currency stronger against the U.S. dollar today. So coming off the weakest level since 1998, right now trading at 136.30 to the dollar. So still quite weak, but a bit of a haven bid for that asset in particular. Of course, the dollar, the big winner on the day more broadly, Matt.
Yeah, absolutely. All right, take a look at what's going on in terms of futures after the big gain, the big bounce that we saw yesterday. We're now down again, another 1.6%. The consensus seems to be growing on Wall Street that there will be a recession. The question is whether that takes us down to merely 3,300 or all the way down to 2,900 on the S&P right now. There are very few bulls left out there. Also, the president just saying there's going to be another pandemic, which is terrifying. The 10-year yield down a couple of basis points right now. We're looking at 3.22 as investors buy that debt, looking for the perceived safety of government debt. And then NYMEX crude also falling hard on recession concerns, down almost 5% right now to 104.46 a barrel for Texas Intermediate. Of course, Bitcoin is correlated to these risk assets, and it falls with futures, but it's still above 20,000 right now. So 20,302, not as bad as we saw on Saturday when it fell below 18,000. Anna, what do you see in terms of European markets?
Here in Europe then, Matt, we see pretty broad-based selling across European stocks. We're down today across the European equity market space, down by more than 2% on the Xetra DAX. So although a lot of this has to do with fears about global recession, and that is sticking to commodities, it's not necessarily sticking to the London market more than others. So the FTSE 100 is down, but down by 1.2%. The DAX down by 2.1%. The CAC down by 1.7%. Most sectors are in negative territory, and energy stocks are the worst performing. Basic resource stocks also not doing well, but we also have some big movers in the more cyclical space as well, and that's weighing on the German market. So here's the energy stock market today. The energy stocks down by 3.4% in response to this, and Matt was talking there about WTI. This is the Brent price now with a 109 handle, down by just over 4%. And whereas we'd seen metals already falling because of some of the issues that Kayleigh was talking about and concern around Chinese growth, now it seems the time, at least in the last few days, it seems the time for oil markets to play into that theme, that recession fear theme as well. We've had UK inflation data out today, another 40-year high. It edged up from 9% to 9.1%. That was exactly as had been anticipated. So although there's no getting away from the fact that this is a multi-decade high, and it is a really high number for inflation here in the UK, it was in line with estimates. And so as a result, some in the market dialing back their expectations for what we might see the Bank of England do in terms of the heavy roster of rate hikes that had been priced into markets previously. And so that weighing on the pound a little bit, and also we're seeing a little bit of a retreat in two-year yields, and generally money going into, of course, money going into sovereigns as we see stocks selling off. NatWest Group, now this is a throwback to the post-financial crisis. At the time of the financial crisis, November 2008 specifically, we saw the UK government become the biggest shareholder in RBS, and then part of that is NatWest, and they still are the biggest shareholder in NatWest. They've given themselves a little bit of extra time, though, Kayleigh, to sell down that stake, and that stock on the move this morning.
All right, well, one stock moving higher, Anna, but a lot of them are moving down today on concern around growth, of course, and I'm sure that is something that Jerome Powell is going to have to address later on today, because the Fed chairman will be on Capitol Hill giving his semi-annual U.S. Senate testimony at 9:30 a.m. New York time. So that's one item on today's agenda. Plus, the Fed speak will continue with Richmond Fed President Thomas Barkin speaking again after yesterday saying that the Fed should move fast, but hopefully not break anything. We'll also hear from Chicago Fed President Charlie Evans and Philadelphia Fed President Patrick Harker. All will be speaking. And finally, on the economic data front, we'll be getting some U.S. data, including MBA mortgage applications. How are those data points changing in response to higher mortgage rates, Matt?
Yeah, absolutely fascinating to watch that as we're focused on housing. Citigroup economists see the chance of a global recession now nearing 50%. That's as central banks tighten monetary policy and demand for goods weakens. Let's get more with Bloomberg's Danny Berger. Danny?
Matt, yeah, it feels like everyone has a recession call, whether it's 50 or 30% of how likely it's to be. You laid out Citi's argument there. Really, it is one that in order to get a soft landing, there needs to be a perfect storm of supply issues easing and at the same time demand sticking around. A lot of folks don't see that happening. So again, it adds to this building choir. We've got Ed Yardeni. Kayleigh, I know you're speaking to him yesterday, and he told you guys that 45% odds of what he sees a recession in 18 months. We talked about Goldman yesterday. 30% is where they have it in the next year. And Nomura earlier this week said it was likely in the fourth quarter of this year. Now, the issue, though, is even if the Fed gets inflation under control, Ray Dalio says don't be naive. That's not an all clear for the economy. He wrote about this in a LinkedIn post saying that while tightening reduces inflation, it doesn't make things better, and that's because it takes buying power away. It just shifts some of the squeeze from people via inflation to giving them less buying power. So again, he's saying it's not just about the Fed bringing down inflation, Anna.
Yeah, absolutely. For those focused on inflation and concerns about how high it has got to. Of course, oil is part of that narrative, Danny, and we do see a little bit of respite today on the oil front.
Yeah, and a lot of respite if you look at it perhaps on a 3-day basis. Since Friday, down more than 10%. These are some pretty substantial losses in oil. Yes, there's a bit going on at the White House. Anne Maria, of course, can cover that much better than I can. But really, this is part of the sell-off today in terms of fear over demand. But one really important thing to note as we look at oil continuing to slide is that there's still a supply issue. This is still a market in backwardation. The fundamentals are still pointing to higher oil. As Goldman says, the Fed, them crimping inflation, that's just a symptom that they're bringing down. It doesn't solve the actual problem, which is underinvestment in the oil patch.
All right, Bloomberg's Danny Berger, thank you so much. And Danny alluded to what's happening in Washington, so let's go there next. Bloomberg has learned that President Biden will call on Congress to enact a gasoline tax holiday as average gas prices in the U.S. are around $5 a gallon. The president is set to make a statement at 2 p.m. Eastern time today. Anne-Marie Horder, Bloomberg Washington correspondent, joins us now from D.C. for more. So, Anne-Marie, the president's going to ask for it. Will Congress deliver?
It's going to be very difficult. Already you have, over the past months, remember, this was floated in February of this year. So for months, you've had Democratic leaders really pouring cold water on it. In recent months, Speaker Pelosi had said the pros of this are very show businessy, and many are questioning whether or not that relief will even be passed on to consumers. So the president is going to make this pitch today. The administration clearly wants to be seen that they are doing something, especially as these are critical months. And we just got the fact sheet about some of the messaging the president's going to say, and it's going to be through September. So these are the critical summer months, and they clearly want to do something around the 4th of July Independence holiday in the United States when you have gasoline prices just under $5 per gallon. Potentially getting rid of this federal tax of 18 cents could help. But the issue is the president is just calling for it. Congress has to act. You have to get some Republicans on board, which that does not seem likely, given some past rhetoric we've already heard in the recent months, and then also his own party.
Anne-Marie, we have separately, we're waiting for the Supreme Court to issue a ruling on concealed carry in New York State, and we're watching the Senate as they get ready to advance their own gun safety bill.
Well, it was advanced last night, and these procedures now set up a vote before the Congress leaves for July 4th recess, that they're going to have 2 weeks off. We could potentially see this bipartisan tax become law. And what this would do is its enhancement of background checks, more money for schools, more money for bolstering mental health resources. And you've had 10 Republicans sign on to this framework. Yesterday, Senate Minority Leader Mitch McConnell gave his green light for this. So what you potentially will see by the end of this week is what backers of this kind of legislation are saying has not been able to happen for decades, is an advancement, enhancement of U.S. gun legislation. But of course, this comes after last month, the massacres we saw, the deadly, devastating massacres in Uvalde, Texas, and Buffalo, New York.
Anne-Marie, thanks very much. Bloomberg's Anne-Marie Horder with a roundup there from Washington. Back here to the UK, inflation rose to a fresh 4-decade high in the UK in May. That's after broad increases in the cost of everything from fuel and electricity to food and beverages. Let's get more now with Bloomberg's Laura Wright. And Laura, this is not necessarily seen as the peak for inflation here in the UK.
Anna, I just don't know what we are going to do if this isn't the peak. Headline inflation in line with forecast, 9.1%. The core slightly below estimates. Interestingly, the proportion of the basket that experienced inflation of more than 0.5% month over month fell from 60% to 50%. That is still bonkers, according to one strategist who I spoke to, but at least the situation isn't getting worse, and perhaps it's a sign that tightening expectations have been overcooked. As a result, the market is now projecting a Bank of England year-end base rate of below 3% from where it peaked on Monday. I have a chart for our radio listeners that illustrates just how incomes in the UK are being squeezed. Real wages for the month of April down 3.5% year over year, excluding bonuses. To put that in context, it's the worst reading since the ONS first started collecting this data all the way back in 2001. It's why we are seeing strike action in the UK this week. Trains on strike for 3 days of this week. More public sector action on the cards in the coming month. Families struggling to make ends meet. Quick note on the pound. UK markets down around 0.5% against the greenback due to the lack of surprises in the UK CPI report and the pronounced risk-off mood in markets.
Yeah, risk-off mood indeed. Bloomberg's Laura Wright, thank you so much. Now, speaking of the markets, let's get back to the equity markets and take a look at some stocks moving in pre-market trading here in the U.S. No surprise, given the declines we are seeing broadly in the commodity complex, you're seeing a lot of commodity-tied stocks weighed down as well. That includes energy players, the likes of ConocoPhillips, down 7.3%. Marathon Oil is down about 5%, and it's translating to some of the metals and mining stocks as well. The likes of Freeport-McMoRan also among the big underperformers in early hours. That stock is down around 4% as well. And of course, Matt and I were on Bloomberg Crypto yesterday talking about whether or not we may have seen a bottom in crypto prices, that the rebound was actually going to be sustainable. That rebound today proving very short-lived. Matt was talking about Bitcoin prices earlier, how they are declining, and as a result, crypto-related equities also are moving lower in tandem with that, giving back a large chunk of yesterday's gains. That includes crypto exchange Coinbase, which is down about 4.9% before the bell, Anna.
Kaylee, coming up on the program, Patrick Spencer joins us, Managing Director at Robert W. Baird & Co. What does he make of recession risk? What does that mean for stocks? And is there still space to hide out in commodities, given the weakness we're seeing in today's trade? And its latest threat to the global economy, the unraveling of a massive housing boom. Read more on that story in today's Big Take. That's at Bloomberg.com or by typing NI Big Take into your Bloomberg terminal. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons here in New York. Anna Edwards with us out of London. I'm looking at the drop that we've seen so far in the S&P 500. Even with yesterday's jump, we're still off about 20%, and strategists from SocGen think that we could fall to 3,200 or even 3,000 even, given a strong enough recession. Michael Wilson also agrees that we could see a drop to about 3,000 if we have the right kind of recession over at Morgan Stanley. Now, this isn't nearly the kind of drop that we've seen in the last couple of recessions, so we could have a lot further to go. Joining us now is Ksenia Galuchko, Bloomberg Equities team leader. Ksenia, what is the consensus now in terms of a U.S. recession? We just heard from Danny about a global recession.
Yeah, I mean, fears are out there. We can obviously see that from the stock market action. So we saw a really nice recovery yesterday in the S&P 500 and NASDAQ. But today already U.S. futures are pointing lower, and at least half of those gains are signaled to be erased. The recession fears are rising, and just like you said, Societe Generale, Goldman, Morgan Stanley, some of these top strategists on Wall Street say that we're far from the bottom in the U.S. stock market sell-off and could see another 15 to 30% downside precisely on the fact that the stock market has yet to fully price in the recession fears.
Ksenia, good morning. We are coming up to that anniversary, the Brexit vote anniversary, fairly soon. It'll soon be 6 years since that vote took place. The Resolution Foundation out with an interesting report around the aftermath and the effects we now see on productivity, the labour market, and a lot of people's minds. What do we see in terms of stocks and the aftermath of Brexit in UK stocks?
Well, the aftermath has been terrible, to be honest. The UK stock market is one of the worst performing major stock indexes globally if you compare in dollar terms over the past 6 years. So Brexit has helped, it has boosted volatility, obviously. It has brought uncertainty. So stocks investors certainly have seen that. However, this year we've been seeing the tide starting to turn because the UK stock market, especially the FTSE 100, is heavily exposed to exporters, oil and commodities companies, and also banks, which have been benefiting, like HSBC, from higher rates. So the outlook has been improving greatly, and the UK stock market is actually one of the better outperformers among developed stock markets this year. So we're seeing only 3% downside compared to over 20% for global stocks and US stocks in Europe.
Yeah.
Well, Ksenia, you mentioned higher rates, and yet what we've seen over the last couple of days is yields moving lower because of growth concerns. Are lower yields a good thing for equities if what they emanate from is concerns around the global growth picture?
Yeah, that's the problem, right? So theoretically speaking, lower yields are good for equities, but because there are concerns about recession, and that is dominating the mood among investors right now, that is actually not such great news for stocks, right? So for all risk assets, you know, the fear of a recession, of a slowdown, of a dramatic drop in earnings because of the inflation risks, that is really dominating the mood and is outweighing the drop in yields, which usually would be good news for stocks.
Ksenia, thank you very much. Bloomberg's Ksenia Galuchko with the latest on these markets. And for more market analysis, check out the Markets Live blog, MLIV Go. That is the function to use on your Bloomberg terminal. This is Bloomberg.
Everyone you meet in Port Harcourt has stories about what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
We are all unique. Without diversity, life would be excruciatingly dull. It's something worth celebrating. It's something that makes us stronger as communities, as businesses, and as individuals.
I see the benefits at Bloomberg on a daily basis. It's beyond flying that rainbow flag. It's about taking the discussions out into the world and making a genuine difference.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. Richmond Fed President Thomas Barkin is calling on the central bank to raise interest rates as fast as it can, as long as it doesn't do undue harm to the markets or the economy. In Barkin's words, go as fast as you can without breaking anything. Fed policymakers raised their benchmark rate by 75 basis points earlier this month, the biggest hike since 1994. Senate Democrats have scrapped a $4,500 bonus tax credit for electric vehicles made with domestic union labor. The measure was opposed by Democratic Senator Joe Manchin, as well as non-unionized EV maker Tesla. It was to be included in the Build Back Better spending bill. China is vowing more pro-growth policies to boost the country's COVID-battered economy. The government will speed up fiscal spending as well as the sale of special local government bonds. Plus, a newspaper affiliated with the cabinet is urging banks to increase lending for infrastructure projects. And Bitcoin is resuming its fall. The largest cryptocurrency is trading just above the $20,000 level. For months, cryptocurrencies have been moving in the same direction as stocks, and today's moves are no exception. Investor appetite for risk assets has been falling in the midst of fears about a recession. But Matt, as we know well, it isn't just about the broader macroeconomic environment turning against risk assets like cryptocurrencies and Bitcoin. There has also been the collapse of individual projects that has caused a lot of concern in the market, and it's starting to become a liquidity issue.
Yeah, absolutely. And there's a lot more activity, downward pressure due to leverage in cryptos that's helping it become unraveled at a quicker pace.
Yeah, indeed. And I mean, leverage around the economy certainly a concern. I saw with interest another stable coin being launched today, this time pegged to the British pound. I wonder if that can be any more tethered to the pound than certain other cryptos have been tethered to the dollar. Something to consider and discuss in future. Patrick Spencer joins us next, Managing Director at Robert W. Baird & Co. What does he make of the selling in stocks today, but also more broadly the pivot we've seen to reflecting recession concerns in commodities? That seems to be a big new trend. We'll talk about that. This is Bloomberg.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Fear of a recession is shaking markets again today. US futures and European equities are down. So are oil and other commodities. President Biden tries to ease the pain at the pump. Bloomberg's learned he'll ask Congress to enact a gasoline tax holiday. And optimism is evaporating that there can be a soft landing. Investors are waiting to hear Fed Chair Jerome Powell's Senate testimony on fighting inflation. Meanwhile, Richmond Fed President Thomas Barkin says the central bank should raise rates as fast as it can. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. And Matt, something seems to be changing in terms of the way that commodities deal with the headwinds that face the global economy. We've been talking about the possibility of recession for a long time. Maybe those calls getting louder. Somehow it's sticking to commodities a little more these days.
Yeah, that's right. And maybe helping to defeat the inflation or to work against, at least in some ways, the inflation that the central banks are fighting. Take a look at what we're seeing in futures right now, down 1.5%. Okay, we had a big rally yesterday, but today it seems that the consensus on it's not whether we have an inflation, but how bad that inflation will be is growing. So investors seem to be hiding out in 10-year treasuries right now. That pushes the yield down a little bit, still at 322. Here's the drop in commodities as represented by Texas Intermediate crude on the NYMEX down to 104.42. So taking out 5% again today. We had a big drop as well on Friday. NYMEX crude and Brent, of course, continue to come down. Bitcoin, is it a commodity? Is it a currency? It doesn't really matter. The fact is it trades very well correlated with other risk assets. And as a result, when you see futures down, you see Bitcoin coming down as well, right now trading at $20,265. Kaylee, what do you see in terms of pre-market movers?
Well, as you say, Bitcoin moves with other risk assets like equities. We also have crypto-related equities that move with Bitcoin. Probably no surprise. So as a result, with the reversal of yesterday's moves higher, lower today, you are seeing crypto-related equities under pressure in pre-market trading. The likes of MicroStrategy, the Bitcoin proxy stock, Michael Saylor, still a Bitcoin evangelist, even for all the price declines we have seen, still has that on his balance sheet. It's down about 4.6% before the bell. Marathon Digital, Riot Blockchain also lower, Riot down by about 4.5%. And then Matt was talking about the declines we're seeing across the commodities complex, oil specifically, and that is weighing on energy stocks this morning. Occidental Petroleum is down about 3.8%, and you have Exxon, the oil major, down about 3.5%, Anna.
Yeah, the rethink on commodities, the rethink on oil prices, the weakness there, Kaylee, certainly something we're featuring here on European stocks. European equity markets then down by 1.6% today. Basic resources, energy names, they are the stocks that are losing the most ground today, and a lot has to do with that weakness in Brent crude, down by 4.2%. So Matt was talking there about WTI. Here we've got Brent with a 109 handle. We've heard for days concern around recession and recession fears in the United States. Ever since we saw the 75 basis points hike from the Fed, of course, that's been a real topic of conversation, but something seems to be sticking to oil prices, as we've said a few times on the programme. Now, the UK two-year yield in here, we're seeing money because of risk aversion in other assets, money going into fixed income, so money going into gilts you might expect. We've also seen a 40-year high, another one on UK inflation, but it wasn't higher than the market had been expecting, and so as a result, perhaps some in the market unwinding the heavy bets that they had put in on the number of hikes we get from the Bank of England, and so that perhaps also weighing on yields a little bit at the margin. NatWest Group, an interesting throwback to the post-financial crisis days, Kaylee. This stock down by 3.3% as the government, which is still the major shareholder in NatWest, which was, of course, renamed from RBS all those years ago, they have said that they'll give themselves another year to sell down their stake in NatWest, and so as a result, the stock goes a little higher today, Kaylee.
All right, Anna, well, as we've been discussing for this entire program, fears of an economic downturn are weighing on risk assets this morning, and guests from the second annual Qatar Economic Forum in Doha have weighed in with their predictions.
A recession is inevitable at some point.
It's almost unavoidable. I got to think that the odds are that there's going to be a recession. Seeing a cooling of the economy is something that we believe is appropriate.
As to whether there is a recession in the near term, I think that is more likely than not.
We're going to have kind of a tough period here.
Our economists, as you've noted, this morning have increased their odds of a recession this year, but really more focused into next year.
If we can stabilize the energy market, I believe when the Fed does their job, we'll have inflation under control.
Inflation's not going to cure itself. There will be, again, more surprises and more shocks coming from central banks.
I think this inflation is quite bad. It's intransigent. It's not transitory, and the consequence will be a recession.
Let's add one more voice to this conversation. Joining us now is Patrick Spencer, Managing Director at Robert W. Baird & Co. Okay, Patrick, what's your recession call, and how does that translate into your equity call?
Okay, a lot of recessions mentioned there in that clip. I think you had Yardini on your program yesterday saying this is the most overhyped recession in the history of reporting on recessions. Everybody's expecting it. Does that mean that we're discounting it? But look, or does that mean that the market's discounting it? We at Baird think there's the likelihood of a 40% recession this year. Failing that, if we do get a recession, our estimate is a soft landing. But if we do get a recession, if you look where the market's traded in the past, I think the average decline in a mild recession has been something like 25%. What are you down in the market at the moment today on the S&P year to date in the States? You're down 21%. So you're in a bottoming phase here. Maybe you've got 4 or 5% downside from here. But there's been huge destruction, huge damage. And I say, has the market already discounted it? You're down 50% in some of the NASDAQ names. The average stock's down 31%.
Okay, and so Patrick, so we've seen a lot of selling already, of course. Do we need to see more selling in commodities and commodity-related stocks before we fully price in any kind of recession?
Well, look, as Matt alluded to, the weakening in economy, look, the market's being helped out by the market that actually, the Fed doesn't need to. I'm sure it will raise rates, but the market's doing its job for us already. The market's, looking at 3.25 to 3.75 by, the beginning of next year. So that in itself, you saw the housing starts yesterday. The economy is beginning to roll over. It's slowing, but it's still growing, and I think that's really important. Look, my daughter said to me at the weekend, "Dad, I can't go to work my holiday job anymore because the cost of the petrol's too much." There's demand destruction happening, so that's going to actually help the Fed. And even Dr. Copper, which is basically known as the best indicator for economic growth in the US, has been declining. It's come off from 10.5 to below 9,000. So the commodities are telling you that they're going to have some weakening. The market's going to tell you we're going to have some weakening in the earnings, but it's slowing but still growing. And a mild, certainly a soft landing is what we expect. I suspect in the second half of the I expect in the second half of the year, commodities might underperform growth stocks as a result of what we're talking about.
Okay, so you expect just a shallow recession. So if we get one, you think it will be shallow, Patrick? I mean, there are recessions and there are recessions, of course.
Yeah, I mean, there's depressions, there's recessions. This is, all the data at the moment, Anna, is okay. I mean, housing starts were down a little yesterday. The majority of economic indicators, the PM, certainly the PMIs are still growing. They're still above 50. So, I certainly don't see a dramatic downturn here. And the market's already discounted higher rates. So, certainly the market being down 20% on the S&P, it's already telling you that earnings in the second quarter have got to come under a little bit of pressure. And already, analysts are beginning to adjust their earnings for next year. I think they were 10%, they're now look at 9%. So yes, earnings are going to get hit, economy's going to get hit. But that doesn't necessarily mean the stock market can't do well, given that it's already had a huge correction.
Patrick, with that kind of demand destruction, and of course it's not just your daughter, we hear it from a lot of people who find other ways to travel. Do you still like the energy sector?
Yeah, we do, but certainly less so in the second half. I mean, that's going to be the area of growth for this quarter in the second quarter. The most of the growth in second quarter earnings per share in the S&P in the US, I think 50% of that's going to come from energy earnings this quarter. Yes, so for the moment, we like inflation hedges because it's a good place to hide, agricultural shares, oil shares, materials, commodities. But at some stage, to my point about slowing economy, and at some stage, people are going to look over the other side of the valley to 2023, when the Fed will most probably have to start lowering interest rates. Yes. And when you get to that point, you've got to start looking at risk on and long duration assets.
Well, as people look towards 2023, we'll see China hopefully also loosening up the lockdowns. They'll start driving more. That could drive up demand for energy and power global growth. What do you think about the China effect?
Well, absolutely. I mean, this inflation problem is supply driven. And it's very interesting. I was at the Baird, Tech and Services Conference in New York 2 weeks ago. I went to Macy's to go and buy some clothes. Now, I'm a pretty common build, so I was looking at all the clothes in my sizes. You can't get them. There's just no supply in these stores. But you try and book a restaurant in New York, it's impossible. So, the demand is there. So I suspect with China, and of course you've got that important ceremony coming up in October. So Xi will make sure that, COVID is behind us by then. The supply lines, should be flowing a little bit better. The inflationary problems should be better, and that should take ease off interest rates. And therefore, to my point about long duration growth stocks doing better in the second half.
All growth stocks, though, Patrick? I mean, which ones in particular, if you could get a little bit more specific?
Yes, certainly. That's a great question, Kelly. I would have thought big tech, big tech growth stocks, which have been under pressure. There's been a lot of tech stocks on NASDAQ that are down 50%, but we particularly like the big cap tech stocks that, certainly on valuations now, you can get free cash flow, almost double free cash flow yields, certainly low double-digit PEs, and also some of the discretionary stocks that have been absolutely killed in this market because the consumer, after 2 years of lockdown, is still in reasonable shape. And consumer confidence isn't fantastic, but it's not bad. So, and I think, you've had one or two issues of retailers that have had inventory problems, but on the whole, the consumer, to my point about restaurants being full, are still pretty healthy. So big cap tech stocks and also Chinese tech stocks and also consumer discretionary are the areas that we like at the moment.
Patrick, thanks so much for your time. Thanks for joining us. Patrick Spencer of Robert W. Baird & Co. Coming up on the programme, Volkswagen's CEO warns gas supplies are at risk. Part of our interview with Herbert Diess. That's next. This is Bloomberg.
stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
I think everyone is concerned, no? Because Europe and the northern part of Germany, where we are living, is especially prone to Russian gas supplies, and it's not so easy to change fast.
That was Volkswagen CEO Herbert Diess speaking as part of the Qatar Economic Forum, talking about energy supplies to Germany, what that means for manufacturing, sitting in front of one of those revamped vans, of course, very nice. Now, oil is sinking lower this morning as recession risks grip the market. Joining us now is Julian Lee, Bloomberg oil strategist. Julian, good to speak to you. What has changed? I mean, Friday we saw a market that was clearly vulnerable to sell-off, oil this is, and today oil weaker again. What has really changed? Is this just that the recession fears have become more pronounced, have gotten louder and focused more on the US, and that is now weighing on oil?
I think that's a large part of it. I think that recession fears are building. There's a lot of worry around inflation. There's a lot of worry around significantly higher interest rates. We have the US president who today is going to call on Congress to enact a tax holiday on federal gasoline and diesel taxes. That's not going to make a huge difference to prices, but I think it is another indicator of concern about the economy, and that is starting to weigh on people's expectations for demand, and it's starting to make people think a lot more about demand destruction, which they see coming through with recession.
Julian, how important is China in this equation? I noticed when they started to loosen their lockdowns a few weeks ago, they said they were allowing driving in certain sectors. And of course, there are a lot of them. Does it make a difference if they open up the lockdowns? Does that make a difference to demand?
It certainly does make a difference, and we've seen China being at the forefront, I think, of a pickup in air travel over the last couple of weeks as they've eased some of these lockdowns and not just allowed people to move around within cities, but also to travel between cities, which is an important part of Chinese demand. Their refineries are running perhaps significantly slower than they would normally do at this time of year, partly as a result of this, these lockdowns that they've had in place. They are going to pick up, and that is going to boost Chinese demand for oil. What's much less clear is how that's going to affect immediate buying of crude by China. There's some suggestion that they may have been building up stockpiles during the lockdowns. Their crude buying came off a bit, but you know, we've still seen levels that seem to exceed their consumption quite significantly, and so there may be stockpiles that they're working through. So any pickup may not have an immediate impact on demand, but that's certainly a concern going forward, that you've got the United States and Europe going in one direction, and you've got China coming out of lockdowns going in the opposite direction, and that may underpin a degree of oil demand going into the second half of the year.
What use on the supply side could American producers be, Julian? Mike Wirth of Chevron pointed out that the Biden administration is constantly criticizing and at times even vilifying the oil industry here. In fact, I remember candidate Biden, when he was campaigning, saying that he thought maybe he should be jailing some oil executives. And now it seems he's not gone to Texas or Oklahoma, but he's going to Saudi Arabia. Why is this administration so angry with the U.S. producers?
I'm not sure that is. I mean, that's certainly a picture that some in the industry want to paint, and I think that's very much a political view. I mean, he has been calling on U.S. producers to pump more. There are huge numbers of drilled but uncompleted wells in the Permian Basin and other
shale basins. There are large acreages of land that are held by oil companies that aren't being drilled. I think the part of the problem is that the domestic industry certainly has supply chain problems like everybody else does at the moment. They are facing significant cost inflation in the supplies of sand and drilling rigs and the frac crews. That makes it much more difficult for them perhaps to expand quickly. I think they're also still being penalized by shareholders for following much more expansionist policies. That they are much more in a mode of giving back to shareholders at the moment. And that, I think, focuses attention elsewhere.
Yeah, and shareholders' perceptions of ESG and balancing that with energy security, all of that moving very quickly at this point, Julian. Thank you very much, Bloomberg's Julian Lee. And of course, we'll keep focused on this because President Biden is going to be meeting with those senior executives from the US oil industry this week. Coming up, Tim Gould, chief energy economist at the International Energy Agency. A timely conversation there. That's at 7 a.m. in New York, 12 p.m. in London. This is Bloomberg.
At the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The planning horizon that we have to attend to would suggest it doesn't get fixed until probably the end of next year.
Wow.
And the real issue, we have a very large, sophisticated, and somewhat fragile supply chain behind the airplane manufacturers. And just as fragile, it turns out, are the operators themselves, the airlines, and the ability to staff up with pilots, the ability to staff up the ground crews, maintenance crews, etc.
That is Boeing's CEO, David Calhoun, speaking with us at the Qatar Economic Forum. Tom Keene, co-anchor of Bloomberg Surveillance, joins us now with his single best chart today, and we're focused in on something that gives the Japanese an edge in global business, right? Tom, you're looking at the yen.
Well, it cuts both ways. It gives them an edge, certainly in the export economy. President Trump would have been screaming about this strong dollar weak yen, but there it is, weak yen. Let's go right to the chart, and it's real simple. It's a long-term trend chart of trade-weighted yen, and the answer is down we go. The white circle's where we are now, and you say to yourself, almost a what if we go to 2 standard deviations down, which has happened once, twice, maybe 3 times across the time here, if we go down that much, what level of yen will we have? And the answer is we'd go to about a 146, which is in the region, Matt, of where people are, 140 and beyond.
Wow. Wow.
Tom, thank you very much. Tom Keene, Matt just reeling there. He's been obsessed with the weakness in the yen. So you're talking his language there, Tom. Tom Keene, anchor of Bloomberg Surveillance.
Well,
he's up next.
I will say, Anna, that I'm watching this very closely because I think that the Bank of Japan is one of the most interesting central banks we have to focus on. A lot of people are talking about going short JGBs or indeed the yen as a way to fund carry trades. Take a look at how big the Bank of Japan balance sheet is, right? I mean, they, in order to fight this, have had to spend 14 trillion yen. They own almost half of the entire JGB market, which is a pretty shocking place to be.
And a lot of focus on how long the BOJ sticks with this current plan. No sign of it wavering just yet, but we know that some in the market have a different view. We'll see if that cracks. I'm watching what's going on with gas markets here in Europe. Once again, Matt, we've seen the German government changing their level of alertness on this from early warning to a state of alarm, which changes the way they prepare for tougher times ahead. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
No central bank wants to engineer a recession.
A lot of countries right now are playing catch up when it comes to getting inflation under control.
I think the Fed's going to have to be aggressive.
I do think recession risks are going up each time the Fed moves, and the Fed moves very aggressively.
At this point, I don't think a recession is yet inevitable.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. A Wednesday, an important Wednesday for the chairman of the Federal Reserve. He will need to address inflation like the inflation in the United Kingdom, 9.1%. Lisa, there is no other story.
Especially because it's not just the headline inflation, it's also the input prices indicating you're going to see even further inflation. We have not seen peak inflation yet for the global economy, and that is concerning central bankers around the world.
You can rationalize it all you want. No, not inflation, that John Farrow's off for like a 3-week sabbatical. Kayleigh Lyons in for John Farrow today. And Kayleigh, what they do, I love how they do this, Kayleigh. They go headline inflation, and then they go, but Jerome Powell, I'm going to look at core inflation. Today, it's going to be Powell, core inflation, politicians, headline inflation. It's that simple.
Well, and Powell talked about it in his press conference last week, Tom, that at the end of the day, what the consumer feels is headline inflation, is the higher prices at the pump, the higher prices at the grocery store. So to a certain extent, that is what the Fed is going to be responding to. And when you look at a day like today, where we're seeing commodity prices coming down because of demand concerns, growth concerns, does that make the Fed's job a little bit easier on that front? Because in theory, it brings that headline down if it lasts.
Definitive research at Bloomberg this morning. Enda Curran in Hong Kong publishes world's bubbliest housing markets. I mean, it's absolutely definitive, Lisa, isn't it?
Well, especially because it's global in nature, and there's sort of an existential underpinning, which I'm going to highlight just for you, Tom, because you always like existential Wednesdays. This idea of how many years can we have of low-rate policies fueling housing bubbles. When you get a reversal of that, how painful could it be? If you get financial markets and the baseline economy both deteriorating at the same time, does that mean a deeper recession? I don't know if I buy it, though, if you want to know the truth, Tom, because you're not seeing housing prices actually roll over that much. There isn't that much leverage baked into the system, but still nonetheless very much a concern as housing prices go down.
And the Curran's going to join us from Hong Kong here on this. The United States right up there with New Zealand topping out, and then the Czech Republic and Hungary. A lot of other stuff to talk about here, Lisa, and I guess the basic idea, Matt Miller was talking recession angst. I don't know if I buy it. Is it angst or just we have no idea, just uncertainty?
This is the moodiest summer ever. People are shifting their moods every day. The most notable shift in mood, existential, moody. Clearly, you and I both have teenagers, but we're looking right now at a scenario where bonds and stocks are no longer selling off in tandem. Bonds are rallying as stocks sell off. This is a traditional correlation. This is a more traditional relationship having to do with some sort of stagflationary or recessionary environment. I find that interesting, Tom.
Kayleigh, what's interesting to me as well is commodities off the knot here. Ed Morris at Citigroup, pretty lonely, saying at some point oil will pull back. Maybe we're on our way. 124 Brent is now breaching 110, 109.47 Brent, Kayleigh.
Yeah, and it's not just in oil. You're really seeing it across the commodities complex and metals as well. Dr. Copper not faring very well. Iron ore, which of course is really reflective around growth concerns in China in particular. You are seeing that growth and demand concern reflective in commodity prices. I would just note, Lisa was talking about the stock bond correlation. Obviously, the gains of yesterday aren't holding. Our producer Pete pointed out in the last 10 days, we've seen a gain of 1.4% or more on the S&P 500. 9 out of 10 of the next days were down, Tom. We just cannot hold on to a rebound in this market right now.
That leads to the data check, negative 58 on SPX, down negative 400. NASDAQ, I got to get the official surveillance mouse out, negative 1.5% on the NASDAQ 100. The VIX from that 30 level and even 29 advances out, a little more angst, 31.33. Dollar resiliency, that's where I want to go on a 104.47 DXY. Yen was solid 136, right now at that level, 136 on yen. A huge talking point right now with an international economics, Euro 105.25, which means we need to stagger to a pre-Powell briefing.
Thank you so much, Tom. Today we are going to be hearing from Fed Chair Jay Powell speaking to a U.S. Senate panel that begins around 10 a.m. How does he address the fact that consumer sentiment is in the gutter?
Explain this to radio. That's a killer chart.
Well, we see the lowest consumer sentiment going back
in history, decades. And this is for the University of Michigan Sentiment Survey. And some people argue this one doesn't accurately reflect the core inflation that the Fed wants to look at because it encounters some of the issues with gasoline prices. Nonetheless, it is clearly factoring into the Fed's decisions, especially given the fact that people are expecting a stickier inflation over a longer period of time. Today, we also hear from Fed officials, including Richmond Fed President Thomas Barkin, Chicago Fed President Charlie Evans, and Philadelphia Fed President Patrick Harker. You should be so happy, Tom, that we have all of the Fed speakers back and getting back up and giving some insight into what to expect. I'm watching the dollar. You know, Tom, you mentioned the dollar, the strength, and that this is the haven. At what point does this become a liability for a Federal Reserve that does have an eye toward international stability? This is going to be disruptive as the rest of the world grapples with some of the same issues as the United States, particularly with inflation, given the fact that they will have to be importing more inflation from the United States if the dollar continues to strengthen. And today, President Biden is expected to speak on his proposal to suspend federal gas taxes, probably going to come around 2 p.m. How much does this really bring the price of gas down, right? I mean, it's 18 cents or something like that. A lot of people have come out pretty much against this, saying it will only increase demand and counter the decline in price that you see. Tom, very controversial. How much support does he even get from his own Democratic Party?
And it leads as well to the tax differential that we see, folks, between Europe, nation to nation, and also what we see in the United States, state to state as well. William Dudley will join us in the 7 o'clock hour, the former president of the New York Fed. His essays for Bloomberg Opinion have been a clinic. They harken back to his magnificent work at Goldman Sachs years ago. And he's released one this morning, and we begin this morning with Dara Mayer, and yes, we will talk to the yen with Dara. But Bill Dudley, and who's going to be on later, says economic history in a hard landing. He is essentially predicting a hard landing. What does the dollar do if there is a Dudley hard landing?
It rallies. I mean, you talk of history. History is pretty clear on this point. If the U.S. economy declines a lot, so as you say, a hard landing rather than some nicely navigated Goldilocks outcome, then the dollar rallies. And of course, if that's happening while the rest of the world is also slowing, then that only adds to that kind of dollar bid. So yeah, I think on that one, history is pretty straightforward.
Are there any other havens, Dara, especially at a time when we're watching the yen fall out of bed? Are there any other currencies that also will get a bid?
Look, I still think there is hope for the yen, if you like, on that front. What it's combating at the moment is rising U.S. yields. Historically, when we're in a risk-off mode, it's been associated with lower U.S. yields, typically, the bid for treasuries. Again, looking to history, in periods where U.S. yields are rising, that supersedes any yen safe haven kind of a lure. But if we're in an environment now where markets are thinking, well, we have peak Fed rate expectations. We're now going to get more worried about a U.S. recession and a global recession. Then I would say the yen is kind of mispriced for that in terms of recession risk.
Okay, so you were saying the BOJ might not actually reach the point where it has to give in, Dara?
Well, it certainly doesn't feel imminent. Again, we had minutes from the BOJ recently, and it shows that some members wanted it to be more explicit that monetary policy is not about targeting the exchange rate. Of course, it's the government, it's the Ministry of Finance in Japan that is much more exercised about this, and it's also they who hold the trigger on currency intervention. So from a BOJ perspective, in isolation, it's inflation, and inflation expectations are still low, 0.8%. So it's hard for them to offer a rationale for why they should begin any even steps or talk of a tightening phase.
Dara, very importantly here, and this goes to the Hong Kong and Shanghai Banking Corporation and what you people did across the Pacific Rim for pushing on 200 years. All of a sudden, or I should say suddenly, on a log chart, Thai baht gives way. Philippine peso, and granted there's a distraction of the election in the Philippines, gives way. Is EM in this heated June giving way to a new velocity, a new weakness?
No, well, look, I think volatility is part of the global deal at the moment, and emerging market currencies generally struggle when you've got slowing global growth. They struggle when you've got a stronger dollar and a Fed that's tightening. So a lot of the ingredients are there, if you like, on a macro scale to pressure EM lower. But the currencies you mentioned, Thai baht, Philippine pesos, these are currencies at HSBC that we've been much more cautious on than some others. There are some potential outliers on the positive side in emerging markets as well. Brazil has been one that we like despite its recent weakness, for example. So I think you got to pick your battles really in EM. I don't think there's a kind of a one size fits all there. But look, the macro backdrop is challenging, clearly, Tom.
Dara, thank you so much. Just a great brief to get us started today. I want to brief on the William Dudley column right now. Lisa, you've taken a look at it as well. He's been heated. He was phenomenal on our Fed show with a really terse statement of where the terminal rate is. And this morning is no exception.
I mean, the line here says everything in the lead. A recession is inevitable within the next 12 to 18 months. This according to the former New York Fed president, saying falling back down to earth will not be a pleasant experience. There is no historical precedent for the Federal Reserve to bring down inflation this much, this quickly, without causing a recession. Right. It just seems like it is the inevitability that we are facing over the next year or so.
And I want to make clear, this is the Berkeley PhD who did market economics, and some would say invented modern Goldman Sachs market economics, where it's about paragraph by paragraph. Hatzius has carried this forward. And Lisa, this note reads like a Goldman Sachs note from 30 years ago, paragraph by paragraph.
And it's a direct response to Ed Yardeni yesterday in response to your question about there is no Volcker on the Fed.
Fair.
Well, perhaps there is something a little more Volcker-esque than some people have been expecting, with a Fed very much committed to bringing inflation back down to 2%.
The toxic brew of this recession. It's Yardeni. It's Yardeni against Dudley.
Really?
Team economist wrestling. Stay with us. Futures negative 52. This is Bloomberg. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden wants Congress to do something about soaring gasoline prices. Bloomberg's learned he'll call on lawmakers today to enact a gasoline tax holiday. Average gas prices in the U.S. are around $5 a gallon. Federal taxes make up a little more than 18 cents of that. It's not clear how long the president wants to pause the tax. In the UK, inflation has risen to a new 4-decade high. Prices rose 9.1% in May from a year ago. There were broad increases in the cost of everything from fuel and electricity to food and beverages. There were also more signs of inflationary pressures building at the wholesale level. Raw material costs increased the most on record. China is vowing more pro-growth policies to boost the country's COVID-battered economy. The government will speed up fiscal spending as well as the sale of special local government bonds. Plus, a newspaper affiliated with the cabinet is urging banks to increase lending for infrastructure projects. The Senate has voted to advance a bipartisan gun safety bill, and final passage is expected later this week. Backers call the measure the biggest breakthrough on the issue in decades. It's designed to improve background checks, securing schools, and giving states federal funds to combat gun violence. And Bitcoin has resumed its fall. The largest cryptocurrency sank to just above that key $20,000 threshold. For months, cryptos have been moving in the same direction as stocks, and today's moves were no exception. Investor appetite for risk assets has been falling in the midst of fears about a recession. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
We do need more money. But we don't just need more money for vaccines for children eventually. We need more money to plan for the second pandemic. There's going to be another pandemic. We have to think ahead. And that's not something the last outfit did very well. That's something we've been doing fairly well. That's why we need the money.
The President of the United States, on one of the myriad tasks he has in June here, a lot of people saying he's overwhelmed with any number of topics, but all of them pushed aside by possibly this afternoon, 2 p.m.-ish. There will be a reduction in the gas tax in New York, Montana, and I believe in New Mexico as well. Amory Horton has visited all those states and joins us right now. Futures negative 52. Brent crude off, you know, the oil coming down here, 124 down to 109 as well. I've never seen this, Amory. I guess I can summarize through the good Greg Vallier at AGF. The reviews are scathing. This, once again, is about the operational process of Mr. Biden's White House. It seems to be chaos. What does he do today?
Well, today he's going to ask Congress to have a gas tax holiday, get rid of the 18 cents that you pay federal tax on a gallon of gasoline, because obviously this is something the administration is really feeling the pain from. This is showing up in the polls, and this is ahead of the midterm elections. The issue is Congress is not going to act. You don't need to be a betting human to think that Congress is going to move on this. For months, they've been talking about this, and Democratic leaders, not just the Republicans, have been throwing cold water on it.
It's Interrupt Wednesday. Excuse me here. I want to cut to the chase. I'm less interested in the gas tax, and I'm more interested in the process in the White House. I can't see this in 8 of the last 10 administrations. How does this stuff get vetted if not only Greg Vallier, but many, many others say dead on arrival?
Well, I think with the prior administration, there was also a lot of concerns and questions about how those processes moved through the Oval Office. What I think recent reporting Bloomberg had from Saleha Mohsen really shows that there is a small huddle, especially when it comes to economic issues. The first 9 months of the president's administration, we learned that Secretary Yellen was not invited in by Ron Klain to some of these huddles. So it does seem like there is a small group of individuals, most notably Ron Klain, of course, Brian Deese, and the president talking about these issues. The issue you have with today is that this is very much so performative. This is the administration trying to spin inflation. We are trying to do something because we know this is hurting consumers at the pump, but it's going to go nowhere. There's no substance.
Well, but Anne-Marie, it's performative, and it's failing even at the performative aspect. I mean, it's not gotten as the support as Greg Valliere highlighted, but it's also Jason Furman, formerly of the Clinton administration and the economics team there. People coming out with scathing reviews, wholesale. What is this a performative exercise for? Who is it for, and who is it going to be successful towards? And if it's not going to be successful for anyone,
how come Lisa asks clearer questions than I do?
Then at what point does this really highlight the desperation, Anne-Marie, in this administration?
Well, listen, we don't know yet exactly how the public, right, the everyday consumer is going to think of this. If you see a headline, Biden is acting on calling on Congress to get rid of a tax, and you're not looking into some of the details of that, potentially that is a Democratic voter that says, I like what the president's doing. He is trying, again, they are trying to be seen as doing something right now, right? Because there's not a whole lot they can do in this market to bring down gasoline prices.
Yeah.
So that's first. It's really just going to be about making a speech, calling on Congress, hoping those headlines get out, because it is actually not going to happen.
Well, as you say, Anne-Marie, the administration is running out of cards to play, and yet they are continuing to try to coax energy players to pump more oil to try and solve the problem with constrained supply. They're meeting, Secretary Granholm is meeting with oil executives tomorrow, and yet Biden is publicly sparring, in some sense, with the CEO of Chevron. I mean, can you square these things for us?
Yeah, that was quite a moment yesterday, and that was from our Jennifer Jacobs asking the president for his reaction from Mike Wirth's Chevron letter. And Mike Wirth was saying there needs to be a different approach from this administration, and we have done the work, the oil industry, and he says that this administration, Mike Wirth's words, is vilifying and criticizing them too much. And the president shot back and said he's mildly sensitive. I didn't think the oil executives couldn't handle this. And then he again called for more refining capacity. But anyone that knows anything about the energy industry right now, we haven't had refining capacity or money, capital investment in refining capacity before the pandemic. This same CEO told Alex Steele a few months ago that he doesn't think another refiner would ever be built in the United States. So this is an interesting moment for the president, because he is trying to get Houston on board, right? He is trying to get the Permian to pump more at the same time, publicly calling them out. I think tomorrow's meeting is going to be incredibly interesting with Secretary Granholm.
Anne-Marie, is there anyone in the administration who is saying that the approach to Russia and banning oil from that nation hasn't worked exactly to plan?
Well, there's something they're still discussing with it, which is this cap on oil prices. So Russian oil could make it into the market, but Russia is not reaping the benefits of the prices we are seeing. This is something that the president's energy secretary, Amos Hochstein, said to us very early on when Russia invaded Ukraine. It was also the fact that not just that you're taking Russia product from the West, but that Putin can still sell that same oil to China and to India and get a premium. What did Russia make last month, according to the IEA? $20 billion selling their fossil fuels.
Anne-Marie Horton, thank you so much. And again, I will visit, I believe, later on in surveillance this morning. Lisa, we've got to take time on the various strikes and rumblings of strikes in the United Kingdom. You wonder, you know, the largest train strike in 30 years, I believe, as well. Really complete chaos over there. Airlines as well. Royal Mail talking about going out on strike. And Lisa, you just wonder, does that come across the Atlantic over into a more fractious labor environment in the United States?
Especially as you have a Federal Reserve and policymakers saying that it is an inevitability that the unemployment rate is going to go up, and you have consumers, the employees, dealing with higher inflation and needing higher wages to just keep pace with where prices are. There was an article highlighting how a lot of companies that are advertising job openings are simply removing those job openings. It's not necessarily job cuts, but Tom, after not being able to fill those roles, they just let them go. And I think this is the stealth tightening of a labor market that has been ultra loose until now.
And you wonder here on the CPI, I'm looking up, Farrow does this better than me. I mean, there's no question about that. I'm looking here, Kaylee, at CPI. I got PCE deflator, I got June 30th. some GDP noise. July 13th is the next CPI report, of course, before the July 27 report. That's going to be important, Kaylee. 8.6% is a survey number.
Yeah, and what if it comes in hot, Tom? Does that be the deciding factor between 50 and 75 basis points at that July meeting for the Federal Reserve? And of course, that's not the only data we're going to be getting between now and then.